that his wife got.
Hey everyone, me Kevin here. All right, wow. So a lot of things going on today. Congress was just the most boring thing ever to watch. I can't believe we spent 2 hours watching Congress and Chair Jerome Powell and Janet Yellen bicker. If you want to learn more about that, just watch the last 3 minutes of that live stream. If you want entertainment, you can zoom around for the disaster that was the first hour, because it was pretty bad too. But it was funny bad. Okay, right now, Joe Biden is talking about the unfortunate shooting that has occurred. We, however, are going to focus on the unfortunate shooting that is obviously not something that should be compared at all. Obviously, people dying is terrible and it's horrible. This is why I want to bring attention to the shooting that happened, if you had not heard about it yet. Biden is speaking about that right now. But we are going to talk about the madness that is in the stock market in this video, because that's, after all, what the title is about. So, oh my goodness. What do we got going on today? Because it's a mess. All right. We've got Upstart down 24% here. Yesterday, this thing was pretty hot. And it ended its hotness. And it's coming straight down. There was a concern that this video is potentially, or I'm sorry, that this company, Upstart, was potentially catching a lot of trader momentum. And as soon as we started seeing a little bit of red, it was like free fall for this company. It was like 3% in the morning, then it was 10% down, then it was 15, then 20, now it's almost 25% down. This is absolutely brutal for Upstart. Now, again, it had a run, but it was like a euphoric run. It was a run that was way overdone, in my opinion. This is one of the reasons, like, I was like, oh, I want to be in the stock, like, at, $60 or whatever. This sounds like, hey, this could be a potential buy. But then the thing like doubled and ran away, and I'm like, all right, whatever. It's quite possible that because day trades and swing trades on things like Gamestop and AMC haven't been playing out, people just decided to go to Upstart. And now all of a sudden, the Upstart trade is unfolding, and it's just kind of like, it's a disaster of shooting and dying and pain and pigs getting slaughtered. It's bad. It's pretty bad. Now, interestingly as well, for some reason, just because MP Materials decides to raise some money, the stock basically goes plummeting. 18% now. It's pretty painful. Now, I don't own MP Materials. I was thinking about buying MP Materials. I'm like, I should do a fundamental analysis on this. Well, good thing I didn't even bother, because the thing's like plummeting now since the earnings happened. So great. This market, train wreck. Pretty bad. And Janet and Jay Powell did nothing to help today. Absolutely freaking nothing to help today. AMC down 12%. It's almost like the market started trending up a tiny little bit as Jerome Powell and Janet Yellen got off TV. Like, as soon as they stopped talking, the market started getting a little bit better. But otherwise, AMC down 12%, QuantumScape down 11.4%, Microvision down 10%, Cost down 10%, Express down 9%, Macy's, which has been on a run, is down 8.8%, plummeting. We got Gevo down 8%, Nordstrom's down 8%, plummeting. The real estate space plummeting. Look at this, 7.5% down. Carnival Cruise Lines, Open Door, Fuel Cell, Sundial, all of these guys, Churchill, all of them 6 to 7% down. ChargePoint, again, bleed. The airlines bleeding, just disaster, crisis, horrible, bad, bloody, gross. SunPower's down 6%. Kappa is down at 12, not as low as it had gone before, but C3 AI is at all-time freaking lows right now. All-time lows. We got Workhorse is down 5.63%. We got Bed Bath & Beyond down. Blink Charging down, all about 5.5%. Win, Naked, Hyliion, Arcturus, BlackBerry, Restoration Hardware, Pain. We've got, let's see, Plug Power's down, Ford's down, Bumble's down, GameStop's down. Spirit Air, Palantir, all these guys, 3-4% here. It's a pretty red day right here. Wayfair, NGA, I mean, these are not the lows that we've seen, of course, because we had some way bloodier lows. But these are some, this is some pretty big red here, This is intense. Let's see here. Yeah. There we go. Okay, so Lemonade down 2.75%. Tattooed Chef is now at 1991. Planet 13, Xpeng, everything. Shift. I mean, you can't feel bad about having bought a stock here and it going down, because it's literally just, it's everything. It's everything. And the fact that Tesla's only down 0.43% is pretty incredible. Maybe Kathy Wood's bull thesis there is acting as a little, prop. Pretty little prop. ARK, what's ARK doing? ARK, ARK's 1.7. Okay, 1.7 on the down. All right, so yeah, a little bit of love at Rocket, little bit of love at Bitcoin. But even Etsy's given up its gains today. And, it went from doing well to not. Doing marginally here. So, let's see here. Watch list. No. Okay. Yeah. Let's listen for a moment. Piton may rally soon. Maybe one day the entire market will rally soon. Not right now. Right now, it is pain. One of these days, we'll get some goodness. But right now, we got a bunch of weenie babies selling everything because they're freaking babies. All right, what's going on?
Temporarily, in order for them to become systemic price increases, persistent price increases, you need them in wages. You need a lot of more mistakes. It took 15 years to get where we got to in the 1970s, including a Federal Reserve that acquiesced to a President Nixon that wanted the Fed to ease to ensure the 1972 elections. And yes, there are tapes on that. So we had a lot of policy mistakes. 80% of wages back in the 1970s were tied to COLA increases. For those who don't remember what those are, cost of living.
She's actually got a good point. Like, this is something that has been regularly said, is that, we will see inflation when we were back at full employment or more. But, look, that's going to be a year or two before we get to full employment. Janet Yellen's hoping maybe by the end of next year, which is, I suppose, approximately 2 years here. I mean, just everything, almost everything that we're tracking, at least, selling off here. We've got some things that are a little green here. If we go to the all stock section, I get a little bit more. We got, the NASDAQ's actually positive today, but which is surprising, because it's so bloody with the amount of pain there are in a lot of these particular stocks here. We've got, Vanguard's flat today. Tesla's holding up, which is surprising here. It did sell off right as Jerome Powell and Janet Yellen were talking. But, otherwise, I mean, it's interesting. We've got some stability coming here about these 0.5% here. Some stability from like the Walmarts, the Domino's, the Microsoft, the Amazon. They're keeping up the indices right now. They're holding the indices. But any kind of trades, larger tech is just getting obliterated. Yeah, Piton, Zoom, Rocket doing okay. But otherwise, lots and lots of red right here. It looks like, okay, well, let's see. Let's listen to this about the dollar here. One second.
Look at a month-to-date chart of the dollar index. It's now hovering at a level that, as you open the chart up to November, is just on the threshold of taking out that early March high close of 92.31. A strong dollar index, well, it probably means you should pay attention, because rates are probably going to stay firm. Seema, back to you.
And with that stronger dollar, we are watching oil here, Tyler, move down by 7%, one of the biggest market moves we've seen in a while here in the energy market. Coming up on Power Lunch, we are watching the markets after testimony from Jerome Powell and Janet Yellen on the state of the economic recovery. There you go, materials and industrial.
That testimony was so boring. How could you even bring it up? How could you even talk about it? We don't even want to talk about it. It was so bad. If you wanted to talk about it, you could just watch the last 3 minutes of the video that we did there together. Oh, I forgot. We almost forgot. Housing cracks. Oh, okay, great. Yeah, well, that's just what we need right now. I did forget though to pin the comment, but we usually do. We got to get the comment up. Oops, wrong one. There we go. Okay, we got to pin the comment. Expiring Friday. Pin. There we go. Okay, pin comment. Perfect. Okay, let's get back to the sticks there. You always got to pin the comment on the course. Which, by the way, I think we had a really good talk this morning about the market and some strategies in the private live stream. Those are really good times for us to really connect and ask and talk or answer questions about strategies. It's tough, to stay consistent in this kind of market because it's just a disaster. Let's pull up the Bloomberg Terminal too, so we got everything booted up here. But the market's just been very, very emotional, and it's rough market. Okay, let's go back here. I mean, gosh, the sell-off at Upstart, for example, is accelerating. I mean, personally, I don't even know that I could remotely consider this one until it's under 100, which we might get to. Yeah, maybe if it got under 80, somewhere in that range. I'll do my analysis at that point. Right? I just stopped looking at it once it was on this crazy run. We'll see. MP Materials, 17%. Look at this. AMC down 14% today. On the day that GME is getting ready to GME is getting ready to report earnings. So that should be entertaining. Thank you for the $20. Appreciate it. That's awesome. Tesla's been trapping all day. Yeah, it's been crazy. Is it true we're getting a fourth stimulus check? Well, at this rate, with this kind of sell-off we're seeing, the stock market's going to need a stimulus check. Yeah, I mean, a lot of recovery selling off right now. It's so weird that the stay-at-home stuff is actually beginning to rally right now because Zoom was not up 5% very long ago here. Peloton was not up up this long while Jerome and Yellen were talking. These have just all of a sudden started pumping here. Really weird kind of switch over here. So then you've got Rocket that is up 4% here. You've got Netflix. Congratulations on your Upstart puts. Yeah, hopefully if you got them recently, that's great. Like today is a perfect day for you. That's great. I mean, we knew it couldn't run forever, but yeah, you had to sit through some pain yesterday because it was going up like crazy. Right. Let's see here. Bitcoin. That's interesting. Yeah. Good. Yeah. So follow me if you don't get all the notifications on YouTube. Apparently, if you follow me on Twitter, you get many more of the notifications right away, which is good. Okay. So, Etsy it's trying to stabilize here. It was almost flat for the day because it started up nicely. I mean, look at this nice run we had on Etsy here this morning. And this just got eviscerated here throughout the day. Now it's up about 0.6%. So we are getting some green again here to try to stabilize the market. Let's look at what the S&P is doing right now. So the S&P did go negative, hit its worst time there, kind of as the congressional testimony was coming to an end, sort of worst moment within the day. Tesla also trying to recover into the close a little bit here. Let's take a peek here at what's going on with GameStop. GameStop is, red candle sticking before the close here. So we have that close coming up with earnings coming up today. It's going to be something. Let's listen in here for a moment.
Index. Now, worst performers on the S&P 500 right now, actually all in the travel space, the cruise lines, Carnival, Royal Caribbean, and Norwegian Cruise Line. Take a look, down 6 to 7% on these lockdown fears out of Europe. Also in focus, we're looking at the airlines, United, American, Delta, are also down by around 3 to 4% as these shutdown worries in Europe, they certainly haven't gone away. And let's also, on that note, turn to the commodity market, which is under pressure. Oil sinking as it gets ready to close for the day. CNBC's Dom Chu at the commodity desk. Hi, Dom.
All right, so Seema, oil prices have been on a bullish ride for most of the last year, but that's not the case today, certainly not today. U.S. benchmark crude prices, you can see $57.84. That's off the session lows, but still down 6%. World benchmark Brent crude futures, $60.90, almost 6% declines there. Like you said, it's worries about the near and medium term demand picture getting put back on the front burner. Cases spiking around Europe. Governments there looking to try to battle not just the rising cases, but the slower than anticipated rollout of vaccines. Germany, of course, extending its lockdowns until April 18th. Chancellor Angela Merkel asking Germans to stay at home during the span around the Easter holidays. Oil-related stocks, by the way, are following suit here. Losses in almost every stock in the S&P 500 energy sector, including Marathon Oil, Diamondback Energy, ExxonMobil. But Chevron, guys, bucking the trend, posting just some modest gains. Tyler, I'll send things back over to you.
All right, the COVID story clearly far from over. Dom, thank you. We have been talking about the impact of rising interest rates on the economy, and today we got a disappointing read on sales of newly built homes in February. Bad weather in the South, but a rising interest rates and prices in part to blame. Diana Oleg joins us now with the details. Hi, Di.
Hey, Ty. Yeah, sales fell a lot more than expected, down 18% from January, but still higher than a year ago. The biggest drop was actually in the Midwest, but ice storms in Texas did take their toll. Really, the issue is affordability. Take a look at where mortgage rates started the month, well below 3%, and where they ended, well above 3%. These sales numbers are based on signed contracts, not closings, so people out shopping and inking deals during the month. In addition, builders have been very hard hit by rising costs, especially for lumber, which the NAHB now says is adding $24,000 to the cost of building a new home. Now, they're also seeing delays for materials and a persistent labor shortage. They pass that on to buyers in prices up 5% year over year. Despite weaker affordability, though, builders are still bullish. And we see that in another piece of data from the monthly report, namely that the number of homes for sale but not yet built was up 64% from a year ago. It speaks to how lean the builders are right now and how much demand they expect to see in the coming months. Back to you guys.
Diana, thank you. As we are starting to see cracks in the housing market, the prices at all-time highs and rates on the rise, Redfin CEO says housing has become a luxury, and that's not a good thing.
Wow.
Joining us to discuss is Glenn Kellerman, the CEO of Redfin.
That's actually a big statement. That's not good if people are starting to talk about housing being a luxury.
There are a lack of homes for sale, setting prices sharply higher. That's frustrating a lot of new home buyers. What do you make of this unique moment the real estate market is in, and how long can it last?
Well, we have demand as far out as the eye can see, but we are worried that most of the demand is coming from white-collar professionals. The working class folks who believe in the American dream are seeing it run out of reach. And that has been the issue for 10 years, and the pandemic has just accelerated it. In a place like Las Vegas, you have home prices up 14% and employment down 13%. That is not a sustainable trend. So we would just love to see home affordability become a major focus, not just for the metropolitan areas and coastal cities, but across the country.
At Redfin, when
Did anyone see that? It said former CNBC disruptor. Like, what?
are coming off the market start to impact your business, Glenn, and the ability to attract new home buyers. I certainly have friends in New York who have tried buying a home and have given up and now are renting.
Yeah, well, it affects our business today. Our sales are very strong, but they would be much stronger if we had more homes for sale. So we are seeing people trying to buy houses, 8, 9 offers, sometimes 20 or 30 offers. In Washington, D.C., a couple of weeks ago, we saw a house go for $340,000 over list. People are on the move. Migration is high, but there just aren't enough homes for sale. And the places in America where we're seeing the most sales growth are the places that have zoned for more new construction. So the fact that the builders are having a hard time getting their hands on lumber and other supplies has just compounded the problem.
Let's talk a little bit about that lower tier home buyer who you say the market is running away from. Is there anything in these rescue packages or in fiscal policy that's out there to help them?
Yes. I mean, first of all, there's just direct stimulus, which is always going to help people feel more confident about buying a home. But I think the long-term solution is to do something to replace subprime lending. So credit is at its lowest level in 14 years. You have VA and FHA loans, but they just can't compete against cash buyers. Right now, you will often see in listing remarks that only are available to the agent that you shouldn't even try to submit a bid with an FHA loan. And it drives me crazy because that is a leg up for the working class to be able to build intergenerational wealth. We just need to figure out what the market-based solution or the government-sponsored solution is going to be to lend money to working class people. It doesn't have to be a predatory loan. There can be a way to do that that's sustainable long-term and that makes the credit markets work for everyone.
Right on.
Seems like it's working, and it's worked for your stock. It's up 400% over the past 12 months. But here's my question. A lot of analysts have been saying that Compass, which is going public now at a valuation of $10 billion, this could be a big competitive threat to your business. What are your thoughts there?
Nope.
Oh, Compass is an incredible company, but it's not really a threat to us. So Compass is trying to build a platform for real estate agents to create their own businesses. And Redfin is just trying to give consumers a better deal. So one company is focused on consumers and another company is focused on agents. The Redfin thesis is that consumers are going to choose the winner in real estate, that if you can sell houses for more money and charge half the fee, you have built a better mousetrap. And I don't think that other brokerages are trying to do that. They're just trying to figure out a better platform for traditional agents. And we are somewhat indifferent to where those traditional agents work. What we're really focused on is the consumer.
Sure. I guess you both offer that tech-enabled solution, though, for housing. Glenn, thanks for joining us today. Glenn Kelman, CEO of Redfin.
Always good to see him. He's always in a good mood, Seema.
Big smile.
The man is always smiling. It's never a bad day in the real estate business, right? All right, a quick news alert. Disney says it will simultaneously release its summer movies Cruella and Marvel's, is it Marvel or Marvel's? Marvel's Black Widow. I couldn't see, you got the word, got up there.
What is it with like broadcasting today? My gosh. Like this is exactly, like this kind of stuff is exactly what was happening with Congress. Oh, what's the teleprompter say? Oh, I'm not supposed to double click the mute button? Oh my goodness, there's a mute button. It's like, what is it with this day? I don't know what it is. It's a freaking disaster. That's what it is. It's just a disaster. And I don't know if anybody saw, you could scroll back for it. But the CNBC, they had the disruptor list up for Glenn Kelman. They didn't even spell disruptor right. They added an extra T in there. Because why not? Why not just throw another T in there? I don't know. I think everybody's on edge because it's a weird market day. It's a weird market time. J-Pal's not running the money printer as fast as maybe the market would like. And look at this. Upstart. It's free falling. Like, where's our music again? I'm free. Yeah, we got to see. I don't want to sing it perfectly. I'm free falling because I don't want to get demonetized. That's right. So 28.7% here is the decline at the moment. Red candle sticking pretty much straight down. MP Materials on not just their bond offering, but also their stock offering. They're really taking a beating over here. We got AMC. I mean, this sounded like bad news for AMC, what they just said here about releasing, both the movies in movie theaters and online. But for some reason, AMC is showing a little bit of a green candlestick there off that. That's something else. QuantumScape now down 11%. Microvision also down about 10. Zom down 10. Cost, Express. Lots and lots of red today. The ones that are doing okay, actually. Oh, look, cannabis actually running up today out of nowhere. Looks like this cannabis penny stock got some big buy orders here just in the last 40 minutes here. It's a little surprising because the stock was really dead most of the day. So something happened here. Yeah, okay. Let's go to the day on this one. Zoom out a bit. There we go. Yeah, this has kind of been the history here just in the last month-ish of this particular penny stock. Zoom on the day chart, kind of been all over the place, but mostly down here since the beginning of Feb. Amazon, Bitcoin, all these guys about 2% today on the green, which is nice. But even Rocket is giving up towards the end of the day here. So, crazy. Bizarro market. AMC now, okay, there we go. There's the red candle. Well, hold on. It looks like it's the red candlestick. Yeah, there we go. Okay, red candle sticking again. So costs on Macy's. These guys all some nice pain over here. Charge point 6%. Matterport's under 15 now. Yeah, this is starting to get pretty cheap for Matterport. I think my cost base is like $13.40 or $13.30 or something like that. Not exactly sure. Not that it really matters. But yeah, I mean, in the last dip, this thing fell to like $11.90 or something like that. We bought some more. Nice way to lower the cost basis. But yeah, wow. Okay, what else do we have here? We've got GameStop. So GameStop reports earnings today. And this should be interesting because we've got, what do we got here? GameStop is now down 6.7%. They report earnings today. We're interested to see if there's going to be a big catalyst on this guy. I don't personally, I don't expect GameStop to show like massive earnings here. I mean, you're going to see a lingering excitement because of, console sales, but like console sales, they can't last that long, like console sales, they come and then you run out of supply. And when you run out of supply, you can't really sell that many consoles anymore. People are going to give GameStop a lot of credit if GameStop can show any kind of transition to e-commerce sales. E-commerce sales is what GameStop is going to be really, that's going to be the needle mover, I think, for oh, that's cool. I was just looking at the 5 biggest S&P 500 movers over the last year, and Tesla and Etsy were one of the top 5, or ones of the top 5, 2 of the top 5. And those are both some of my bigger holdings. Well, Tesla obviously, but also Etsy. Pretty big. Tesla, Etsy, I'm almost what, 10%, something like that. Anyway, which given that Tesla's like 50%, something else being at 10% is pretty big. But anyway, so yeah, GameStop. I don't know. Like, here's the thing. This is actually a good question somebody asked. How the heck is GameStop going to compete with Steam? That's going to be a big issue. I think GameStop competing with Steam is. I mean, I use Steam, and they make it so easy to download a game. They make it so easy to download even in-game items. Like, let's say you want some new cosmetics on your character in Rust, because which, by the way, if you play Rust, if you go to medkevin.com/discord, there's actually a little application section, and we used to be like a motley group of Rust players, and now we're becoming more coordinated, and we're starting to run servers, which has been fun. But anyway, so if you're interested in Rust, go to medkevin.com/discord. Show us your AK spray. I'm still working on mine. Anyway, so but yeah, I mean, you got the PlayStation Store, the Xbox Store, you've got the Nintendo Store. Like I don't get it. I don't know. Like, I don't look at, maybe as a swing trade. Maybe I used to play a lot of Counter-Strike. Maybe as a swing trade, GameStop. But would I be trying to swing off these earnings? I don't know. I could not. It's a total, like, you can take the magic 8-ball out and that'll tell you whether this is going to go up or down after earnings, because it's not something I think we can predict. Let's listen in here.
Well, will the numbers be a reality check for this stock? We will be right back.
And now, the latest from tradingnation.cnbc.com. And a word from...
All right, let's see. Wow, used to be a pro Counter-Strike coach. That's really cool. Wow, that's amazing. So, all right, let's see here. Yeah, no, any stocks that anyone has bought in December, January, and February, probably kind of sad right now. It's rough. You look back and it's almost like the last 4 months they've evaporated, and we're waiting for the last 4 months to come back. And it's like, no, thanks. No, thanks. Not coming back. Not coming back at all. Then you've got, okay, so let's go back over here. So far, I mean, stable down for a lot of these things. Macy's actually continuing going. Yeah, Macy's continued its fall here. So Nordstrom, pretty good amount of pain over here in the market. Yeah, just everything's just blah. Wow. And looking for the opportunities too, but Tesla's now down even a little bit more too here, 0.6%. Apple down 0.5%. Yeah, you're always trying to hunt for those opportunities, but it's fascinating. By the way, I wanted to mention on that CEO Glenn Kelman thing, I think he's right about what he says. I don't think Compass is competition at all to Redfin. I think Redfin's going to continue to crush it. In fact, the reason I like buying Redfin on the dip, I've got a lot of Redfin. That's another one that I've got like 10%, 9% of my portfolio. It's a really good chunk is in Redfin. Anyway, if this thing gets under 60 here in the sell-off, Whew, I'll start buying that thing again. Nice and heavy. Maybe is it a nibble at like 65, somewhere around there, 60, 65. It's pretty good price for Redfin. Whew, it's crazy. This Marquette right now. So this one you got to be careful with. I don't invest in it. I love the CEO, love the vision, think everything's great. The big danger you just always want to be careful of with the under $1 is this is when you look at the weekly view for this stock, and oftentimes these can be like temporary. I hate to use the word, but like pumps, right? You have to just be careful about that. I think the company's great though. I love the CEO, so I hope not. Like I want them to succeed. But it's really weird because they've been on this decline since actually like the bottom of the market. They've been on this decline for like 5 or 6 days, and now all of a sudden they're running again, which is exciting. So look, again, love the CEO, love the company, but yeah, when you get the smaller stocks and the volume changes substantially, just be watchful of it. Like, let's see if we go to the minute chart here. Maybe they had some good news. I know they were planning on like expansions and stuff like that, but this volume went from like during market time here from like 100 to 200, maybe 1,000 shares to shares being bought like 30 to 60,000 over here, 80,000. Yeah, I mean, look how skinny this stock gets sometimes. Like this morning, there was a period of time where you had 370 to 3,000 shares. I mean, a lot of these 200s here all of a sudden, occasional little spikes. But yeah, that's incredible. And keep in mind, like $12,000 is like, 12,000 shares is like $8,000, right? Or $9,000. So yeah, it's really easy to move this stock. Really easy. Yeah, if we go back to before let's go back to like the beginning of let's go back to like mid-February before the stock became very popular. Okay, so this was like, it was a 10-cent stock, and at 10 cents you have 1,000 to 10,000 shares worth of volume, which 10,000 shares at 10 cents is $1,000. Like, it's been very, very, very low vol. So just be careful. Like, I would cheer 5% at Peloton way more than I would cheer 7% here, because this is going to very likely be more stable because of the volume. And again, it doesn't define a company as good or bad. It's just, it's different. It's a very different 7 or 10%. So yeah, Peloton, Zoom are doing decently here. We do have talk about GameStop here. So let's listen to this because we do have earnings today. It's a big day.
Is relevant, number one. And what does this company, I go back to the first question, what does it have to do just to survive?
GameStop has suffered nearly a decade of self-inflicting wounds from poor acquisitions, half-hearted turnarounds. So this time they need to go on the call and they need to explain why this time it is different. How do they plan to evolve to the digital age, to e-commerce, to mobile? And then bigger picture, they need to explain what is their game plan to evolve into a technology brand.
I get the challenges that
How are you going to do that? How are you going to evolve from a store brand to a tech brand? Like, you can't even get old tech companies to evolve.
Bidding up this stock to now a company to see where it's trading at right now. What would it take for you to sort of change your view and perhaps lean into the powerful role these Reddit traders are playing, and they don't seem to be letting up really with GameStop?
$16 is quite a free fall from where shares are trading right now, but that price target underscores our confidence that this steroid of interest in GameStop will splinter off. From a behavioral economics perspective, the closest parallel I can draw when I look at GameStop, past, present, and future, is the Occupy Wall Street movement. Now, the steroid of interest in GameStop and this Occupy Wall Street movement both were founded to make a statement on social and economic inequality. Now, the Occupy Wall Street movement splintered off into other movements.
All right, I'm gonna stop listening here. Look, we'll see what happens. We'll see what happens with the GameStop earnings. We shall see. I'm not jumping up and down. Not jumping up and down. I will, and look, I want to be proven wrong there, right? But anywho, instead, whew, it's I have to say, look, it's tough. It's a very, very, very tough market right now, and there's I've been buying very, very, very little. There's one I bought some. I haven't done an analysis on this yet, but I bought some Voyager Digital. After interviewing the CEO actually twice. Really, really good guy. I'm still very skeptical though of the whole stable coin thing. Not the Voyager coin, but stable coins and sort of business model there. So there's some more work to be done on that, which we'll definitely keep an eye on. But yeah, I don't know. I don't know. We'll see. So I like the company though. Plan on doing a video on that one. Anywho, Upstar down 28%, MP Material 18%. Lots and lots of pain. Very much pain, with the exception of the stay-at-home stuff, the couch stocks, the Peloton, the Zoom, the Netflix, which, yeah, Peloton is a couch stock because you buy a Peloton and then you look at it from the couch. Costco, Microsoft, Bitcoin, Dropbox, Domino's. Domino's goes up when the COVID stuff goes up. This is almost a pure COVID day here. I'm surprised that the Europe lockdowns are having such an impact on these particular stocks, but that's what we're seeing. Tesla now down a full 1%. You just do an 1800s English lady voice? What? Tilray down 1%. DoorDash, Li Auto. Yeah. How is Tesla doing? I mean, we saw that. Let's go to the actual. Yeah. I mean, it's still not breaking the previous hits that we had here. Pinterest still staying above 70. It's just a disaster. How about that? It's a disaster. Okay, let's look at. Let's see what Fox has to cover. Okay, let's see it here.
All right, my man, I think it's going to have a double-digit move tomorrow, but I'm not sure in which direction. What do you think, Mike?
Charles, I think this stock at this level is pure speculation. I think what's going to move it is not so much the earnings, but the guidance about how this business plan and this company is going to transform into more of a subscription model. Will the street be comfortable with that? Will the Reddit users be comfortable with that? If you want to get involved in this stock and it gets crushed tomorrow, if it's down 10, 15, 20% tomorrow, there's your entry point. But again, at these levels, anything above 20 or 30 bucks in my mind for this stock, you're in pure speculation. But hey, if you want to take your $1,400 stimulus check and put it in some YOLO options, God bless.
Jeez, this guy's talking down hardcore talk down there.
I don't discount the Reddit crowd. We'll see what happens, but it is a stock we'll all be watching in 1 hour for sure.
Yeah, this is the buy the dip man.
Well, more well-known name I want to get your thoughts on is Microsoft. That stock was higher for most of the session. It's still up, I think, right now. $10 billion bid for Discord. How do you like the deal and the stock?
I like Microsoft. I think they're taking share in the cloud. I think the cloud is a super growing industry that's here to stay. As you move over to the game side, their Xbox and their Game Pass service, this Discord is a great complement to it. There's a pay portion of Discord, a subscription service, their message board, and the Game Pass service from Microsoft. Any way they can grow their video gaming part of their business is a further diversifier. It is a growth industry that's not
into the
this day and age.
When an individual makes money, everyone's entrepreneurs. I have a kid who bought a house, paid $50,000 and bought a house. After decades of the short, you have to accept the fact that individual investors are playing the same game that you're playing, and now you're losing.
Here we go. Come on, push it. Buying the dip. Here we go. Come on, push it. Buying the dip. Here we go.
So I'd be looking to rotate out of the stocks.
Let's leave it there as I hand it over to Cheryl Casoni. Cheryl Casoni, Mike Lee says there's going to be more motion in the ocean, so brace yourself.
Well, you know what you just said that I really like is you said you don't want to bet against the Reddit crowd. Remember that 10-year-old that made like $3,000 on his trade? I made like $10 when I was like, where's that kid right
Oh,
now?
man.
Yeah.
I made $15 one time carrying groceries, but it took me all day, Cheryl. It was one of my greatest days ever in my life. But man, I worked hard for that money.
I've been working since I was 12, and here I am still doing it. So what do I know? Charles, thank you very much, sir. Charles
See ya.
Payne. Yeah, well, so Wall Street, okay, so we're hitting session lows at the moment. I've got an hour to turn this around. I'm going to do my best, but we are nowhere near the losses.
She just said she's got an hour to pump it.
Market lows of the pandemic hit 1 year ago today. Now, right now, here are your numbers, and we are at session lows. So the Dow is down 220, the S&P is down 20, NASDAQ is down 110. We'll see how the next hour goes. Our floor show traders are going to tell us if the sequel is going to be as good as the original bull market run up. Sometimes it is, sometimes it isn't. Plus, Fed Chair Jerome Powell, alongside Treasury Secretary Janet Yellen, testifying before House Financial Services Committee today about the government.
So boring. Oh, it was bad. All right, let's see if we got Sarah. Is Sarah back?
Market will ask value investor Scott Black where he's putting his money to work right now. But first of all, let's get straight to the big stories we're watching. Mike Santoli's tracking the market action for us as always, and Steve Leisman has the big takeaways from Janet Yellen.
Where's Sarah?
Testimony an hour or so ago. But Mike, let's start with you. Broader market slipping into the final hour trade.
Yeah, it is, Wealth. We're used to these days when Treasury yields backing off, we get a broad bid in growth in tech. It's not really happening. There's a much more pronounced defensive type of tone to the market today. A little slippage in this rotation we've gotten.
Slippage? There's shrinkage. There's lots of shrinkage happening, and nobody likes shrinkage. GameStop's actually moving up a little bit. Looks like all the news places are just going to do a little bit of a market recap over here to see what's going on. There's GameStop, 6.8%. Hey, look, if you want an opportunity to get on Voyager, I think my cost base is like 22. So, well, we're now down 70%, or not 70%, 70 cents on that. So whatever. If it keeps going down, I'll buy more of that thing. Which actually was part of my intention is start a little small position in it. I think it's like 1%, and I could probably get Voyager up to like 4%, something like that. Anyway, we've got Upstart still selling off. It's kind of trending. Oh, there we go. A little green candlestick here. Kind of trending towards. Oh, here we go. Oh, all of a sudden we got a big buy order coming in here. I was gonna say it looked like it was starting to trend towards down 30%. Upstart, if we break 100 in the next few days, maybe that'll actually be an interesting one to potentially actually look at here. So what do we got over here? We got MP Materials, same thing, going down. AMC, Microvision. Okay, a little bit last hour potential recovery at some stocks here. Most things are pretty much straight down here. I mean, this is Open Door, for example. Let's zoom out a little bit just to see the day a little bit more perspective here. So this is our day in perspective. Yeah, look at that, just a crash towards the end of the day. But I mean, it's just been a brutal day all day. It's been very, very rough all day. And it just gets worse and worse and worse. You look at the day, it's just down. It's down. AMC's down real bad. Here, cost just went down even more. We got Gevo straight down, EXBI straight down. Even Clever's down today. Oh my gosh. GHVI is 7.6% on the down here. Carnival's down. Everything's down. Well, I mean, then again, Amazon I think was up. Yeah, and then of course Peloton. Talked about these guys. Nice little slow trend up here. It's so surprising that there's such a weight coming in from the cruise lines. Let's go ahead and jump on over to the top news here. Let's see what we got going on in top news. You know what I wonder is, I wonder if we could get live video through this. Live video. Bloomberg Media video? Oh, that'd be cool. Because otherwise I get all the ads, and I wonder if maybe that would take out the ads if we watch it through this. Watch now. Ooh. That would be cool. On air? Janet Yellen? No, she's not on air.
been fighting that though, and we know typically it's not good to fight the Fed. We expect the bond market is pricing in one rate rise in 2022 and 2 more in 2023, while the Fed dot plot is indicating that they're going to keep rates lower through the end of the year, through the end of 2023. However, if the economy grows faster or inflation ticks up, we would expect potentially them to reduce asset purchases by year end. The hurdle for them actually raising rates is quite a bit higher. But we think the economy is going to continue to grow. It's going to be volatile and continue to be volatile on yield news and certainly vaccine news and the negative news out of Europe today. But we think it's a positive trend from here.
Yeah. Maybe that's what it is. Maybe today's just crap because somebody's comment here. GameStop headquarters is removing all office chairs and are instead replacing them with banana hammocks. Right. Yeah, I mean, I don't know. This Europe news, it's having, I don't know. It just seems like I can't imagine it being the reason for this. I mean, this is a disproportionate impact on the market today. Because the 10-year, it's not like the 10-year's up. It's not like oil's up. This is bizarro. Yeah, no, the 10-year's slipping. Yeah, look at this. The 10-year's at lows over the last 3 days here. We've got, let's see what the 5-year is. 5-year. Let's see. Okay, here we go. 5-year. 3-day. Oh, it's also slipping. Yeah, see, look at that. Just continuing its decline over here. I don't know. Okay, what do we got over here?
So we're just fractionally off the lows, down 210 on the Dow. The low is 260 about 15 minutes ago. Up next, a new vaccine controversy. Shares of AstraZeneca getting hit today over concerns about newly released trial data. We'll speak with a member of the FDA's Vaccine Advisory Committee about that data and what it means for future authorization. You're watching Closing Bell on CNBC.
Just reading the comments here. Dylan and I would have to partner on an NFT for Buy the Dip. I mean, it is so good. That's a great idea. Okay, what do we got over here though? Let's keep listening let's go tune into Bloomberg.
Whether it be for income, perhaps less right now than we would like, stability to keep you invested over the long term, diversification from equities, and of course, liability matching.
Meanwhile, Emily, there is so much discourse about cash on the sidelines. When you're speaking to your clients, when you're thinking about money to be put to work among them, is there still need to get invested?
Absolutely. With the potential for a spike in inflation, which we do see.
That's crazy. Did you just hear what she said? She said, is there a need to actually get invested? Like, seriously? Can we remember this moment right here where Wall Street media actually asked whether or not we should be participating in this market? Like, is that a sign that they're just panicking and melting inside because, oh my gosh, there's some red?
We want to thank you, Emily Rubin, private wealth advisor and family office consultant over at UBS. Great to have some time with you today. Thank you. Come back. Meanwhile, coming up, Baidu's big debut. After raising over $3 billion, the search engine started trading.
Okay, what do we got over here? Let's see. Are they pumping the market yet?
A year ago, because they'd seen this play out before. Lord knows we did not expect the markets to rebound as fast as they did over the last year. We'll take it, but not complaining. But wow, it's been quite a year. Guys, thank you very much. It's great to have you both here.
So true here. Feels like putting your money into a fire pit. I got to look it up, but there is a video of me somewhere literally putting money in the fire, our chimney or whatever it's called, our fireplace. And it was last year. It was last year during the crash because that's exactly what it felt like. I still think some things we could get a little closer to those lows. I don't think we're going to go lower than the lows we saw, but I wouldn't be surprised if we test that, because remember what happened with last March. March 23rd was the bottom. 10 days later was the next bottom. Maybe it was 11 or 12 days later. It was like April 3rd or something like that. Now a little bit beyond that right now, but we don't have to perfectly align that. The point is, it's not uncommon to retest that bottom. Hopefully, you don't fall through it. I don't think we will, because I think that stress of the whole bond crap is over. But yeah, you want to be prepared for picking up some deals. I've been pretty lame-o on buying stocks. Now, even if I don't send buy or sell alerts in the Stocks and Psychology Money groups, I usually still put together a nice little narrative on what the heck is going on, or some thoughts or some cheap stocks to look for. So it's not always just restricted to what I'm buying or selling, which selling is obviously very rare. Although I have been considering some things, but we won't talk about that right now. Okay, let's keep listening.
$1,000 per 1,000 board feet, and by comparison, during the house,
I don't care about lumber prices. Look, I get it. Lumber prices are up, and it sucks. But I don't think 99% of us here care about that. Sarah's back.
To 60 years or older. Texas, Wilfred, goes to anyone above 16 next week. Amazing the progress we've seen in the year.
Not quite down to our age yet, but we're getting there. We're getting there. Sticking with the virus, shares of AstraZeneca are moving lower today amid concerns over its new vaccine trial data. Meg Terrell's got the latest on this roller coaster ride for this vaccine, Meg.
It really is. Well, I think saga might be the best word I've seen to describe what's been happening with AstraZeneca's vaccine. Here's the latest. Remember yesterday we reported
who wants to take it now?
Phase 3 trial in the U.S. of AstraZeneca's vaccine showed 79% efficacy, which was higher than many people expected. Then, overnight, the National Institute of Allergy and Infectious Diseases, Dr. Fauci's institute, said the oversight board overseeing that trial had sent it a letter expressing concern about, quote, outdated information pertaining to the efficacy.
I if I had to pick a vaccine, I don't think it would be that one, okay? And I don't want to talk about whether we're taking vaccines or, because I don't want to get political here. But if I were to take the vaccine, it's like, look, sign me up. I don't care. Flip a coin. Give me the Pfizer or the Moderna. But come on, there's maybe unduly so, but there's been a lot of negativity around Astra. And I don't know, call me crazy, but and I don't want to be unfair to AstraZeneca, but I'm sorry, it just wasn't as good. It's not as good. If the efficacy is closer to 69 to 74%, do I want that, or do I want the one that's 90 to 95%? Come on, 90 to 95%. That's like 100%. I know it's not exactly, but it's like. It's so close to immunity. If you're around other people who are vaccinated, you have to compound 95% times 95%, which gives you the chance of infection between two people who are vaccinated. If I do 95, stupid thing, 0.95. Why? It's not that hard. 0.95 times 0.95 is the chance. Well, that's okay. Okay. Well, it'd actually be the 1 minus. So why am I screwing this up? Why can't I do math today? 0.05% chance of getting it times 0.05. Oh, and it's percent. There we go. Okay. So, because that would be 1%. This is a 5% chance. There we go. 5% chance of getting it. 5% times 5% is 0.25% chance of getting it. There we go. I did math. I can't believe it. I did math. Thank you, Dawn. Thank you. That was it. That's what I finally came to. This is why I took 3 hours on my math test. I'd get the right answer, but I was really slow. I did pass my math classes. I know. Well, then again, let's not talk about stats for econ though. No, it was not stats for econ. It was calculus, calculus and statistics. That was okay.
At the FDA, do we need the AstraZeneca vaccine? Why is it such a priority that we get this U.S. data and this shot approved?
Well, thank you for that. Let's be clear. This pandemic is far from over. You've highlighted some very positive developments, and we'd love to see that trend continue. But globally, there's a very serious need for more vaccines and more vaccine supply.
Yeah, 1/4 of 1% is the same as 0.25%, right? Yeah. So yes, if 2 vaccinated people are in a room and you have a 95% chance of not getting sick with the vaccine, 2 people in a room, you multiply the odds, the 5% chance of getting it, 5% chance of getting it, multiply it together, you get 1/4 of 1% chance of getting sick from 2 vaccinated people in a room. Just multiplying the odds there. See, like that was like the stats, like that was like stats 101. That's good. When it was like stats like 105, that's when I'm like, I'm checking out. I'm done. So I could do stats, but stats with calc, I'm done. Okay, so MP Mats, calc was its own thing too. Although I did do well with calc itself. 29% on Upstart as a loss now, kind of continuing its decline over here. Really, just it's all of the recovery ones selling off, plus it's momentum and recovery getting destroyed, hammered, absolutely a disaster. Ugh. So gross. Use the coupon. Oh, look at this. Somebody donated $10. $10 to say use coupon code HODL and join the course before it's too late. Join us in building wealth. Don't be a weenie baby. You know, Terry is going to seem like a plant, but Terry is not a plant. That is really cool. Thank you for wow. Thanks for that. Okay. So, all right. Let's see if Fox is pumping yet. What do we got over here at Fox? Yes, agree. Oh my gosh. Yeah, Palantir. Seriously? What? Palantir. Oh my gosh. 20. Hold on a sec. Let's go to Bloomberg here. GME. Okay. I want to pull Palantir here for a sec. Palantir. Let's just do a quick skinny fundles. Skinny fundles. That's what we'll call it. Why is the market falling? I blame Jerome Powell and Janet Yellen. Everybody was waiting for them to talk today. And that was the most horrible congressional testimony I've ever heard. Like, please let me run one congressional testimony session. Like, they just need a moderator who could ask real questions, not redundant questions. I don't even want to think about the fact that was 2 hours long. It was so bad. It was so bad. Somebody asked me, by the way, how do I feel about the government? Like, how does that make me feel about the future of America when our government is that dysfunctional? Like, on one hand, the government sucks at helping you, right? But on the other hand, and this is a stretch of an argument, and I know it, but I believe it. I believe the more dysfunctional our government is, the less likely it is that we have inflation. So let that sink in. That's a crazy comment, right? But because there's so much of a fight to get stuff done in Congress, the odds of change that would turn into just like literally endless money printing, even though it already feels endless, it kind of hasn't been, right? Most of it, with the exception of the last package, has been bipartisan. So if you think about how hard it is to spend money in Congress, it actually kind of reiterates how, why there might be less inflation than some people expect. So anyway. Buy me Kevin course, also NFT collab. Email me, man. Okay, let's see here. So revenue. Okay. Oh wait, yeah. So what we were talking about Palantir. Get to talking about Palantir, Kevin. We need some music. Hold on. What do we need? Bull. Yes, that was so slow and delayed. Wait, you know what we need to talk about Palantir? This is what we need to talk about Palantir, okay, folks? Now we're going to talk about Palantir, a stock that is currently about 50% off from all-time highs, a stock that you can build wealth with while it spies on you and learns everything about you. But don't worry about that. Get your tendies with Palantir. Okay, let's take a look at what we got here. So Palantir's projected 2021 is about 1.5 billion in revs. Would bring us to about, we're still going to lose money, it looks like, here in net income. Oh, no, I'm sorry. Net income is actually going to be positive for 2021, but really not stabilizing EPS until approximately until about 20 cents of EPS here in 2022. So forward, what are we paying here? We're paying like 200 times earnings for 2022 over here, right? Really nice growth, though. I mean, this is really solid growth. 35%, 31%, a little bit declining, though, or the expectations are that growth's going to decline. That would be normal, though. So really hitting, still hitting some nice growth figures here, getting to about 26% growth in 2023. The margin, I actually am surprised it's not higher for their net. But personally, as I've been digging through the fundamentals, I think this is really just like the thing with these software as a services companies is it takes so long to get people acquired, and the research and development is so expensive. And once you get the acquisition, that's when you try to print tendies over time. Let's see if we can actually look at their income statement here. So let's see here. 2021, we have. I want to break this apart a little bit. I don't think it's going to break it down the way I want it over here. They kind of just lump it together. I really want to break this down. No, it's not going to be balance sheet. Cash flow statement, maybe? No. Okay. Nope. So anyway, but I could get the actual filings here. So that's what we'll do. We'll grab the filing really quick. Then we'll look at the sticks again. So let's see. Company filings. Let's see. Oh, I've already been going through their latest filing, but it's going to be easier if I just get this. Let's see if I can get this as a PDF really quick. Give it to me. Gimme. Stock market is broken. Yup. Kathy might want to buy the dip, but it gets hard to buy the dip when people keep selling. It sucks. They get outflows every time ARK is red, people sell. Okay, let's go to their. I've been reading through the top pages in this. I'm still working on my 10K here, but okay, here we go. Okay, this is better. I want to get to, let's see, income statement, cash flow statement. You get to income, please. If I could command find, it would go faster. Oh, here we go. There we go. This is what we want. All right, let's take a quick peek at this, and then we'll get back to the other sticks. Okay, so quick peek here. Zoom in a little. There we go. Okay, so a quick peek here has, see, look at that sales and marketing. So look at this. You actually had revenue go up a good chunk here from 2018 to 19. You had revenue go up a good chunk from 595 million to 742 million. Pretty good growth. I mean, that's like, what, 40% more, right? And sales and marketing actually declined. But then in 2020, you had an explosion of expenses. Look at this. G&A doubled. Wow. Then you had research and development, almost double. And then you had the sales and marketing go up substantially as well, about 50% up as well. So, this is a company that's reinvesting a crap load of money. And they have in 2020, that is a crap load of reinvestment into the business here. Now, what we want to see is those margins improve, though, as revenues go up. And those are the bets you're making. Like in terms of technology is pretty unmatched. I mean, there are other, obviously, artificial intelligence companies as well, data service companies, but it's all, the big thing about Palantir is going to be getting the customers. They need customer growth. They probably need revenue growth to be somewhere around, I think they need revenue growth to extend 25% for 5, 6, 7 years. And if they could stay on that trajectory, that would be good. We are kind of seeing, at least the current projections from Wall Street are that, revenue growth will grow at 30, 32%, somewhere around there for a couple of years, but then start declining to the high 20s. So we'll see how that goes. It's a classic growth company, right? But yeah, those expenses, we want to see those come down in the next earnings report. Like at least the ratio of growth of those compared to the revenues, we want to see that improve a little bit. I would certainly say within the next earnings report would be nice to start seeing that. You look at something like Etsy. Let's do that for a moment. Let's look at something like Etsy, and then we'll look at the sticks here. So let's go to Etsy, for example. And I believe I'm not going to have to open up their filing for that. I might have to. Oh, see, Etsy's broken apart, so I don't have to open their filing here. But Etsy, for example, they doubled their SG&A, but they also doubled their rev. That's different at Palantir. Palantir didn't double their rev when their SG&A doubled. Now, it's also a different style of company, right? Like you buy with Etsy, great. Hopefully you come back and buy again. Palantir, you spend the money to acquire a big contract, that prints tendies for a long period of time without continuing to have to advertise. So even though these numbers look nice over here at Etsy, Palantir has the potential for a much greater profit in the future. And we'll see. You know, they're both bringing in somewhere around $1 billion in rev, which is honestly crazy to think about. But yeah, let's see here. I want to see the Etsy's margin really quick. Their latest margin. Let's get the latest net income. Not showing as a margin here. Well, it's 349 for the last 12 months. Well, this is last 12 months. Let me get 2020 really quick, and then we'll look back at the sticks here. So 2020 net income, yeah, okay, the same 349. Depends when they update this. 349 out of 1725. So what about 5%, something like that? Yeah. Okay. Okay. Cool. Etsy's one of my faves. Let's jump. Let's see what we got over here. What's Sarah and CNBC talking about?
Positive for the economy, and everyone sort of unleashes this excess saving. Just on the stocks today, by the way, Jim Cramer 7 minutes ago, that crude itself is weighing on some of these bullish US economy stocks, even if there's no actual causal link between the two. In fact, you could argue with some of them it should be a negative correlation, but hard when oil is down 6.5% for some of these stocks that have exposure to more US cyclical factors to be up today. Still ahead, 2021 has been the year of GameStop. The stock up 900% after a furious retail-fueled rally. In just a few minutes, we'll get the company's first earnings report since the Reddit frenzy began. And before those numbers come out, we'll speak with the CEO of investing platform Stash, which bills itself as an anti-day trading alternative, about the rise of the retail trader. As we had to break, here's a check-in on bond yields. Yields are low today, 163 on the 10-year. So a decent size pullback as we speak.
Pullback in yields, not to be confused with a pullback in price, which is the opposite. Ooh, okay, what's going on here? Let's see here. Let's go. Okay, so these guys have been the same here. Upstart and MP have been roughly the same. Yeah, AMC also about stable here, kind of bouncing around a little bit. Microvision almost down 1337, but that is not elite today. That is bad. Yeah, these are some accelerated sell-offs here, though. EXP has almost at 10%. Has accelerated past the Macy's sell-off here. Matterport down. Woo! It is just bloody, but it's everything. It's everything. With the exception of a few things here, oddly, it's the recovery, the stay-at-home stuff, not the recovery, the stay-at-home stuff. But you're not even that high on these guys. I mean, even Peloton and Zoom, these guys were up like 5% for a minute. But now they're selling off again. Woo! Wow. It is just hot. It's getting too painful to handle. Hot because we're close to the fire, not because it's on fire. It's like we're close to the fire. I don't know if that makes sense. It feels like our money's going to the fire, okay? That's the hotness we're seeing today, the red hotness of pain. Okay. Chivo, Clever, Open Door. Like that's lots of 9%. That is not so good, okay? This is we need some do we have any bad music? Oh yeah, here we go. Okay, ready? Okay, everyone. Stocks are down a lot today. We got Microvision down 13%, Upstart's down 28%. We got Macy's and all the recovery stocks, like the airlines are down like 4 to 9%. American Airlines down 7%. United down 7%. Maybe Delta's doing better, I don't know, but Marriott's doing bad. And so is oil or oil-related stocks and the restaurant stocks and Virgin Galactic. Okay, music's over. Yeah. Woo! This is pretty bad. Soon, maybe if the pain continues, it'll be shopping time again here. Woo! Oh no. Let's see. What else do we have here? Apple. Oh yeah. Okay. Twilio, Tesla. Tesla's down about 1.5% ish now. 222 for Square. Pinterest trying to stay above 71 here, but also trending in that ouchie direction. Yeah, those are some red numbers here. Let's see. I want to see top news as well here in the Bloomberg, and we do also have. Okay, let's see what they're talking about here.
Express concerns about possible hoarding of coronavirus vaccines by wealthy nations. The comments came during a meeting of 5 leaders.
No, America wouldn't do that.
Netflix, by the way, this is one of the top leaders on the S&P 500 after Argus upgraded that stock to a buy. But it's the UBS move on these stocks that's actually making the biggest effect right now. Well, the restaurant industry is taking lessons learned from the coronavirus pandemic to create what some are calling a pandemic-proof business model, from expanding outdoor dining to creating more socially distanced indoor dining options. But will any of these measures be enough to keep the industry going? It's been so hard hit. Jeff Flock joins us from Philadelphia with a little bit more. Jeff.
Happy to be in a beautiful, sunny Philadelphia. And I'll tell you, I don't know any industry hurt worse by the pandemic than restaurants. But look what this restaurant has done here. Everything from booths for the outside to...
I mean, it's like, if you create a COVID cloud in one of those and like the waiter or waitress comes in, wouldn't that be a bad thing? Like, it feels like you'd be walking into somebody else's cloud. What do I know? I'm just some dude on YouTube who's bouncing between that and the Bloomberg terminal. Oh, man. All right, what do we got here? U.S. stocks slump as oil tumbles. Bonds advance. Really? I haven't seen bonds advance. Bonds are not advanced. Oh, you mean maybe bond prices are advancing. Bond yields are falling. See, they pick whatever they want in their titles for the clickbait. Okay. Yeah. Somebody says regarding the what we've seen, what this kind of stuff. They're like, look, restaurants are inventing indoor dining. Wow, a new invention. Indoor dining. Look, rooms. Dining inside. How civilized. Oh my goodness gracious. Okay, stock slump as oil tumbles. Yes, we know. Companies that would benefit from an end to the lockdowns are faring the worst amid concerns of rising cases and new restrictions in Germany, signaling that the global reopening will be delayed. The S&P 500 index slumped, and the small cap Russell 2000 dropped about 3% as beneficiaries of reopening, including Carnival and TripAdvisor, declined. Inflation stations. UBS calculates problem inflation levels for different stocks. Oh, interesting. So this is somebody's, I think if I click on it, I ruined. Oh, no, there we go. Okay. So this is an interesting chart. They suggest that if inflation hits in emerging market stocks at about 2 or hurts them at about 2.4%, the S&P 500 inflation hurts it at about 2.5%, and value stocks get hurt at about 2.9%. European value stocks at about 3.4%. That's a fancy chart they got here. Take a little screenshot of that. That's fancy. All right. There we go. Okay, so what else? What else is going on here? We've got, let's see, news here. Biden plans to reveal budget spending priorities next week. Oh, so much for this week. It was supposed, like, on Monday, we literally read Biden plans to reveal his budget plans this week. And now they're delaying it a week. Why does that not surprise me? Oil plunge deepens 1 hour. Okay. Loan Depot fund cashes in on housing boom. Okay. Yeah. Okay. Back to where we were, which is, how about here? Let's see what we got here.
In the red, still up at juicy more than 10% basically, but that recovery has really started to slow. So too has the likes of emerging market FX. What's flat? It's US Treasuries, your favorite, Taylor. What's down? In the yellow, it's the US dollar. But on the higher side is, of course, equities. And it's not just public equity valuations doing well, private are as well. And let's talk about private funding rounds. Online pharmacy and health technology company, it's called Roe, has just completed a $500 million Series D fundraising round aimed at advancing the company's strategy of building a patient-centric healthcare system. For more, who better than its CEO, of course, its co-founder, Zachariah Reitano, is with us.
Let's see here. Let's see what the sticks are doing right now. We do have about 25 minutes left in the trading day. Oh, it's kind of surreal. I mean, we continue to see this dip today here. A little bit of a worsening here. For example, Pinterest has now accelerated its declines here. We've got AMC, Upstart, and MP. They're pretty stable around those losses here. EXP has now graduated to the double-digit loss here. And Gevo is about, oh, there we go. Gevo's just graduated to double dip, drop. Macy's, Nordstrom, big pain over here. Big pain. SPAC's getting hurt too. We've got, lots already. Even Dave & Buster's down 7%. ChargePoint, 7%. BlackBerry. Okay, let's look at GameStop. GameStop, 181. Yeah, we'll see. I don't know. Those earnings are going to be fascinating. We do have earnings expected to come out in about 30 minutes, within 5 minutes of the bell. We'll see. Actually talking about GameStop right here.
Exclusive. Stash CEO Brandon Craig. Stash is a mobile stock investing app, and Robinhood.
Now we're going to Stash. No thanks. Not so terribly interested. So Marion, Campo, Win. Yeah, gosh, I mean, somebody's asking, would there be a long position to establish right now? We were talking about this morning in both the private stream, actually mostly the private stream, my strategy here. And right now, no. Would I nibble on some if I wasn't in margin? Sure, maybe. I mean, some of these things are in nibble territory, but all of this could rebound tomorrow, which is fine. But, we've put a good chunk of money in during the last dip. And I wouldn't mind seeing, in some sense, like if I could schedule this out, if I could just have, if the stock gods are listening, okay, here's the way it's got to go. We got to get to within 5% of the prices that we had on March 5th and 8th, which would put Tesla somewhere around 560, not as low as it was, but puts them around 560, 570. Same kind of sell off on the other things. I go buy and dump a ton of money in, and then we'll just have the market skyrocket, or preferably double right away, and then we just hang out. We all go for walks. We take 3 months off and we go on a walk, long walk. That's my plan for the market. That's it. It's got to happen. Knock on wood. There we go. Big buying up, then double. Okay, maybe we won't double right away, but the rest is going to happen. Who knows? Anyway, 29% here. So far, really, I mean, I'm trying to see if we've got anything accelerating. Carnival, Churchill rather. Churchill is. Carnival, or Sundial is, it's a little balanced today, but with the exception of already being down 8%. Fuel Cell's down 8%. GoPro's down as well. Yikes. Let's see. What else do we have here? Workhorse, Dave & Buster's. Dave & Buster's recovering a tiny little bit. GameStop. This is going to be fun when we get the report on GameStop. I look forward to that. Because earnings are going to come up from GameStop, and they're just going to go get that 38% off coupon code in the link down below for the programs expiring Friday. That's going to be how they get into e-commerce sales. We'll have them study e-commerce by pitching the coupon that expires Friday. Okay, let's see. Are they talking about GameStop or what is it? Let's listen in for a second.
Stash is that one of our customers puts all their eggs in one basket, or puts their life savings in a single stock. It's just not what Stash is there for. If somebody wants to buy GameStop, we do provide education. We provide a lot of guidance and advice around what is the risk around the exposure you're going to have, and what is volatility, and we teach it to you so you can get a good understanding of what happens, if it goes down or if it goes up. And so we are seeing a lot of people own it, but it's definitely not the only thing they're buying. And what's really cool is a lot of people come because they're interested in some of the meme stocks, but they end up buying something that's very diversified, or they buy multiple investments, because all of a sudden, the 100+ million people in America that are not investing are finding out that they can do it. And it's really cool. And it's really, like, quite frankly, it's invigorating for people to know that they can start building wealth, not only for their futures, but in their retirement accounts and in their kids' accounts. And it's really about access, which is the most important thing.
Brandon, what risk is there that recent first-time buyers of stocks become sellers if one of two events plays out? One is the reopening goes well and they have other places to put their money. And secondly, if those people experience significant losses that get kind of locked in for the first time in a way that perhaps over the last year hasn't been the case.
Yeah, I mean, I think for a lot of people, especially a lot of financial companies, if you're thinking super short term, you're probably going to get that type of thinking. For us, from day one, from the second.
Oh, that's a Robinhood slam. They're basically saying Robinhood is by implying that Robinhood attracts, the momentum traders, because we know that's what everybody has said. Robinhood attracts a disproportionate portion of people who are doing that. You're a short-term thinker. So he's basically saying Vlad's a short-term thinker.
Really important, because long-term investing is the best way to create wealth versus buying and selling and buying and selling and buying and selling. And so with what we're dealing with in this country right now, with how bad the financial situation was for so many people, even before COVID, and it got a lot worse with COVID, it showed so many people how unprepared they were financially. And so myself and all the amazing people that work at Stash are most excited about introducing long-term thinking and wealth creation, which is why we're more than just quite frankly, a fintech app. We're really becoming a lifestyle brand that really plays into helping people create better financial lives for themselves.
Brandon, thanks so much for joining us. We appreciate it.
Thank you so much. I appreciate it.
We are closing in on the top of the hour, just minutes away from GameStop's results. So we'll preview what to watch next in the market zone as well. Of course, as the close, with 18 minutes or so left of the session, we are down 350 points on the Dow.
If you want to get back.
The cost of systems independent of the battery technology. So the power converters and inverters take the electricity, take the power from the battery, and then convert it either to drive the vehicle itself, the majority, or to power other auxiliary electronic systems.
I haven't heard of this company. What is this? Transform?
It is the fastest switching of all semiconductor power conversion technologies available today. And we enable cooler DC-DC converters, cooler systems, giving freedom of design, faster onboard chargers with higher power but compact size. For example, one can reduce charging time to, say, 80% charging in 10 minutes, 15 minutes.
Oh,
and above all,
that would be great. That would be great. Before I let you go, I'm almost out of time, but I do want to ask you.
Well, whatever, but they're pumping that stock, or at least it had a pump over here. It's up 16% right now. Had a pump, it's a little slowing down a little bit. Yeah. All right. Let's see here. Okay, let's go to the all stonks here. All stonks, let's go. Come on. We got 17 more minutes of pain to get through. And then once we get through these 17 minutes of pain, we get a enjoyment of the GameStop earnings. We'll get to see what happens at GameStop. But between now and then, we are in the
House of Pain.
There we go. A little delayed. I gotta fix that. But anyway, what else? So Costco, Coupon, Walmart. Yeah, I mean, really, even the things that are doing okay today are just suffering. That's what it really is. The things that are doing okay are suffering. And everything that's suffering is dying. It's pretty rough here. Getting more double-digit sellers here. Express now down as well. Gevo's sitting right below that double-digit sell-off, right along with Macy's. But Churchill Capital here and Matterport, they have now broken into their prior box that we drew. These were the crash boxes that we drew. That's crazy. They are going back into their box. I was not hoping to revisit those boxes. Nobody was, obviously. And hey, if it goes through the other side, it becomes a buying op, so keep an eye on it. But this is a broad market sell-off. This is not individual companies getting screwed here. Of course, they all are getting screwed individually, but they're also getting collectively screwed. GameStop up a little bit here as we get to earnings in about 15 minutes, maybe 20 minutes, depends when exactly you report. Fisker under $20 per share. This thing ran up to 30 for a hot minute. That's crazy. Oh, is Adobe reporting too? We'll take a peek at that. Let's write down what's reporting. Give me just type in earnings and then what's reporting. We know we got GME. Yeah, we'll check out Adobe. Chamath. I think Chamath got margin called. I think that's why he sold, because he had talked about getting margin called before this sell-off. And that's dangerous. Like, you got margin called in a bull market, like when everything was going up. How? Like, maybe one of your stocks went down a bit, but then you were getting asked for liquidity. That's scary. So, the last time I sold stocks was February 9th and 16th. Which was right before this whole sell-off started. That was $1.5 million worth of stuff I sold. That was great because I was able to use that to go shopping on March 5th and 8th. But I haven't had an opportunity to sell since then. Like I was saying, hey, look, if we get a nice little run up here between around March 10th, 11th, 12th, would have been nice to have an opportunity to sell. But we never really got a big run up. We got a recovery from some of those, but we never got a big run up again. And that's why we're seeing sort of the second wind sort of beating right now. It's painful. So, sold to invest in climate change. I think that was a good excuse. If you listen back to the interviews, you'll hear him talking about getting liquidity calls. So, okay, let's see here. 24/7 stream? No. All right, what do we got here? $4,000 for a GME call. You bought a call on GameStop right now? Hey, well, you're about to find out if you're printing. I mean, the problem is I'm sure the implied volatility is so high, the pricing is just gonna be horrible right now, right before earnings. I don't think the pricing's gonna be good right before earnings here. Okay, stable on the reds. The things that are red are pretty stable right up here. Zoom and Peloton kind of still softening into the close, falling into the close basically. Sell off here on the cannabis play. Wonder how the rest of the cannabis is doing. Like how's like, I think Clever's down a good chunk right now. Yeah, they are. Clever's down with Planet 13. They're down. We got the THCQ. No, X. Yeah, the cannabis ETF. Oh, when the cannabis ETF is down 3.5%. It's like, okay, must be in a rough market. And that we are. All right, let's see what CNBC's got going on in the closing bell. Anything to comment on?
Some of the announcements about this infrastructure package and how it's going to be paid for, I think there is a little bit of hesitancy given the fact that it's going to be offset by some pretty meaningful tax increases. And so, is it a little bit too much, too fast? Perhaps. Are we looking at potentially a rebalance into the end of the quarter? The other thing to look at is that, there's opportunities here, certainly with rates pulling back for those, investors who maybe haven't made a play in financials yet. There's a number of really strong banks out there that you can pick up in your portfolio.
So in the private group, and we'll come right back to her here, but in the private group, I just want to show you a message that came through in response to the question that we had. I think it's very important. This was just posted a minute ago or whatever when I took the screen. Actually, that was right when it was posted. But yeah, okay. Oh, sorry. I just wanted to provide that update. Let me go back over here.
Fed does plan to respond in the event of rising inflation. Listen.
Our most basic tools are here to try to achieve price stability, and those principally are interest rates and moving interest rates up and down. As I mentioned a few minutes ago, though, our best expectation is that there'll be modest upward pressure on prices this year, but that they won't be particularly large or persistent into the future. But we do have those tools, and we'll use them.
Does the market buy that, Shannon? Modest increase in inflation that won't be lasting?
I don't know the market buys it, but I think from an economic perspective, you should be buying it, right? I mean, this is clearly going to be a transitory period of inflation over the next couple of months, just based on year-over-year comps from where we were last year to where we are today. If you're looking at things like commodity inflation, particularly in areas like lumber, if you think about where the commodity supercycle burst in 2005 and 2006, some of these stocks are really looking ahead to expect a similar supercycle to be building. And I don't, necessarily see that. And so if you think about inflation being transitory, if you think about the basket that the Fed actually looks at, I think you need to look past the next 3 or 4 quarters out into 2022 to really get a gauge on when you think the Fed will be less accommodative. I don't think they want to move too early. We saw the ECB.
Really, like Jerome Powell saying like 100 times, we're not going to move early. We're going to signal any moves well in advance of any moves. That translates to, I don't think the Fed's going to move too early. What? Duh. That's what they've been saying. But anyway, I wanted to put this is silly, folks. We watched this. This is a silly headline here. U.S. indices are trading lower as investors weigh comments from Chair Powell and Treasury Secretary Yellen. No, this had nothing to do with Yellen and Powell because they said nothing. They were worthless. They did nothing today because they got asked stupid, dumb questions. If Congress didn't have their, I'm not going to say it. If Congress had their act together, maybe there would have been some comments, but we got nothing new from them.
Aggressive in terms of, running up in the face of all these issues after a 70% run in 12 months.
Oil prices are under pressure again. CNBC.com's Pippa Stevens joins us with all the details. Quite a big, solid intraday sell-off here, Pippa.
Yeah, that's right. Well, demand concerns once again sending oil prices tumbling. WTI futures dropping more than 6% and settling under $58 per barrel, the lowest level since early February. The contract also broke below its 50-day moving average for the first time since November. Brent crude also sliding around 6% today. Lockdowns in Europe weighing on prices, sparking fears of near-term demand weakness. Looking ahead, tomorrow we'll get more U.S. inventory data, and it's expected to show a draw after 4 straight weeks of increases. That's according to a survey from Platts. So that report will no doubt be market moving. I'll send it back to you.
But thanks so much for that. Shannon, where are you on these names? A bit of a buying opportunity in the banks. What about in energy if it continues its pullback?
I think we need to see a more meaningful pullback in some of these energy names based on where we are year to date. I think we're talking a lot about the demand aspect. I think you need to look at the supply aspect. If you were looking at 2021 in general,
Kevin just lost lots of money
in terms of energy inventories. You were still thinking that we were probably going to be over.
I don't know. Sorry. All I'm hearing right now is this. It's just a weird market. It's not her fault. She doesn't know. It's just a disaster. It's a disaster. That's it. That's all we got. So we look at the disaster together, and it's like, okay, well, maybe it's time to play Rust because this is painful. What are they talking about here on the Bloomberg? Bloomberg.
Inflation and yield risk. And the last thing I'd say about that, I think you made it pretty clear, just to encourage us all not to mistake inflation indigestion on the yield curve for an outright heart attack. And that all of that is just...
That's a good line. Don't mistake inflation indigestion with a heart attack. That's good. That's a good line.
Coherent. Let's create coherence as we're managing through short-term reflation trade, which is sort of one investing box versus the obvious nature of us slingshotting ourselves rapidly into the future of digitizing the economy, which means that you do want to have a portfolio, very much entrenched in those themes and to sort of not miss the forest for the trees.
Wow.
I love some of the descriptive language you use and ownership of humanity. Sherry, talk to us about, therefore, when you're looking through these volatile days, where to gain that clarity for investors, where to double down, where to buy up? Is it that you buy the growth stocks that in the longer term will outperform, or is it that you get in on some of the reopening trade when you get a Carnival cruise being beaten up so badly?
Yeah, look, I think the answer is both. The way that I'm describing it to clients right now on my team is that we want to be invested and ladder our portfolio around idea maturation. In the same way that maybe you would think about laddering a bond portfolio against the maturity of a bond, we want to look at how these ideas are likely going to mature over some time horizon, and then understand the risk components to each of the risk of that idea not maturing or maturing. So from a reflation trade standpoint, it's not surprising that we see volatility based on vaccine, because the whole reopening is based on the successful rollout directionally, and then frankly, how long that may take. We know that it will take maybe potentially a little bit longer as we're now seeing how this pipeline is opening up. But I think that the greater risk is that this actually turns out better than we could think. Particularly with all of this cash sitting in money markets and accommodative Fed. Now, from a long-term standpoint, what we're really asking clients to do, and frankly, all of us, is to shift our consciousness around what a modern economy actually looks like. And that requires us to go from what I would kind of refer to as old paradigm, like if you can touch it, feel it, and squeeze it, it's real, to these concepts around what digital value is. And, how does code placed in a supply chain through a blockchain actually build efficiencies and increase earnings? And that shift is something that I'm really educating clients about, because it's really a shift in consciousness about how we actually, on a relative basis, value things as we evolve into a very different touch point economy.
Sherry, stick with us. We're just going to dive a little bit deeper on this market action on a day that...
Oh, just think about it. I mean, first of all, just really, really appreciate it. I mean, those insights were great. That was really good. I have to say, that was one of the better speakers that we've had on the market. She knows her stuff. That was really good. Sometimes you and this is everywhere, right? Sometimes you listen to some stuff and it's like, okay, somebody could be right on something, wrong on something. Then there are people who are well versed. Then there are people who are clueless. But then there's somebody who's just really, really can speak in depth on multiple subjects. And I think that was good. She's on it there. Let's see what else you got.
Dependent on the Federal Reserve, like you said, on bond yields today. Really catch a bid.
Sort of create a visual around really digesting the magnitude of the year that we've all had together. That would qualify for, mentally, spiritually, physically, financially for people. And then as a society, as we've now taken on the spotlight of this pandemic, as, a real spotlight around money inequality in the United States. So we're continuing with all of that sort of stuff. Now, how does that relate to a portfolio? We need to be as dynamic with our money as we've been as a society. And that means being liquid in a portfolio, rebalancing on days like today if you're underweight in small cap, repositioning portfolios as these themes sort of entrench themselves, being very tax efficient when you do that, because it's not what you make, it's what you keep. And to really have good conscious, a conscious grab on what your portfolio is designed to do.
Sherry, talk about rebalancing at the end of this month. I mean, I feel like we're going to get 1 million people saying,
quarterly rebalancing.
It's because of end of month, end of quarter rebalancing. But is it from your perspective?
Well, look, I think that just given algorithmic trading, that those are realities that we should understand. It's one data point to understand the nature of volatility, to keep our minds going from the worst case. These are temporary states. I think that that's what we need to understand. So if your portfolio is underweight and you're in a rebalancing and see a setback in a sector that fits one of your long-term themes or your short-term reflation theme and you're underweight, then you should take advantage of that. I mean, that would be...
She's basically saying buy the dip if part of your portfolio is a little underweighted. Hey, look, if you want to get into more of the Macy's or the airlines or the restaurants now, hey, look, you got yourself a sale day. She's not wrong. I think we potentially could go a little further here as we revisit this double dip, which I think we were kind of now in the double dip. Yeah, I don't know how low it'll go, obviously, but I think within 10% of the prior dip. I don't believe we're going to go past the prior dip. I do not believe that. Obviously, I could be wrong, but that's a strong belief I have. We have a little bit of a recovery here into the closing. CCIV coming out of the box. We've drawn for it. EXPI now sub 10% down. Redfin, this sounds crazy, but only 4% down. Things have been worse earlier. let's zoom out here for a second and just look at, we've got Zoom, Peloton still leading gains here in the day. Walmart, Amazon, Target, a lot of the stay-at-home stuff that does well here. Dropbox, I mean, pretty flat. Rocket Mortgage ending the day flat. The thing was up like 5-6% at one point, and now ending the day flat. Upstart's going to be down 29%, and we are now up for closing bell. Let's go.
1.7% energy as well. Utility, staples, and real estate are the best performers. S&P down 0.75% at the close. Tech, NASDAQ is hit even harder, down more than 1%, and the small caps getting slammed the hardest. The Russell 2000 ending the day down more than 3.5%. Wilfred.
Welcome to the closing bell, everyone. I'm Wilfred Frost, along with Sarah Eisen and Mike Santoli, CNBC Senior Markets Commentator. As Sarah said, the Russell 2000 hit hard, down 3.6% today. The Dow was down 308 points off the lows, which was down about 370, but still down a full percent. The S&P 500 down 0.8 and the Nasdaq down just more than 1%. Utilities, the only significantly green sector, up 1.5%. 2 other sectors higher, and then 8 were lower. Materials, industrials, financials, and healthcare all down more than 1%. Energy too, also down more than 1%. All eyes now turning to GameStop's quarterly results as the company's first report since the retail trader revolution sent the stock soaring nearly 900% this year. We'll bring you the numbers as soon as they are released. Plus, the CEO of video game publisher Take-Two Interactive on GameStop's results and the outlook for the gaming industry. Shannon Sakosha from Boston Private Wealth is still with us, and Mona Mahajan from Allianz Global.
All right, we are now on deck for those GameStop earnings. We are going to beat CNBC to it, because that's what we do. Rah, 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 rah. Okay, hold on. Okay, so we are on deck for these GME earnings. It's going to be fun. We've got some other earnings as well. I think we got, it was Adobe. What else do we have? Who else is reporting today? So we've got GameStop. Let's pull them up here. Let's go Adobe. I love the closing bell, by the way. It's CNBC. I love it when they we gotta have the music transition. You know, we don't get the music transition in the AM. It's like we get the music in the close, but not in the AM. So we got Adobe, GameStop. Oh, Steelcase, office furniture. They've got. I almost think that they probably trade like a recovery stock, like maybe up recently, but down since the beginning of the pandemic. Let's see. Steelcase is SCS, and let's just go day really quick. Yeah, okay, up since November. That makes sense. Office furniture here. And yeah, I mean, this actually looks very much like a recovery stock. You know, lower, trying to get back to where it was before the pandemic. Well, that's interesting. Okay, let's get back to our sticks here, or not our sticks, rather, our news report. So we are waiting. We've got an implication of a 6.1% move at Adobe. GameStop executive follows CFO to exit in Cohen shakeup. Another person getting kicked out? GameStop announced second executive departure in less than a month. Chief Customer Officer Frank Hamilton will leave. The news came before the release of its quarterly, slated for market close. Wow, we just had another executive leave. BNGO? Oh, okay. BNGO. So, yes. So, awaiting GameStop. Let's keep GameStop up here. Where's GameStop? This is GameStop. That's interesting. So we had another release here, or sorry, firing, I would say. Okay, what else is reporting? None others that I really recognize. I don't think I'm even gonna look at Steelcase here, but we've got Adobe, BNGO. Oh, here we go. Okay, announces financial results. So BNGO is in. We've got revenue at 3.99. I don't follow BNGO, so I don't know what the expectation was, but we can check the update here really quick. And I want to keep an eye on GameStop and Adobe, obviously, here. So, okay, results. Where are the results? Here we go. Fourth quarter revenues were $4 million, an increase of $1.2 million or 43% compared to 2019. Don't use percent when you're comparing here. It's so, this is so, small. Those are relatively small numbers. We've got primarily due to $1.1 million increase in service revenue contributed primarily by our this particular subsidiary, so whoever that is. Still nothing from GameStop here. Revenues in total were 8.5 million, down 1.6 from 2019. Decrease driven by customers limiting their lab operations in response to COVID. Gross margin was down 9% from 2019, primarily due to approximately $400,000 in one-time charges regarding year-end accounting. That doesn't sound good. That does not sound good. Okay, Adobe's out. Hold on. Adobe's coming in fast. Adobe beat by about, 6-7%. Adjusted EPS came in a good chunk higher at 3.14 versus 2.79 expected. Ooh, okay, revenue came in at $3.91 billion. So a beat here on revenue again by about $15 million beat. Raises annual targets on strong Q1 results. That's good. So we got a beat and a raise on Adobe. Very good. The BNGO does not sound so great. We've got margin down with year-end accounting. We've got sales down year over year. Some blaming of COVID here. Doesn't sound great on BNGO. I don't follow it enough to be able to weigh in on that. Adobe, obviously, this Adobe announces executive retirement. Let's see what the retirement is. John Murphy's retiring. Spend more time with family. Focus on philanthropy. Vice president and CFO. Markets don't like it when the CFO leaves, especially on a beat. The guy's obviously leaving on a high note here, on a beat. So that should do very well. I mean, that's the time to bow out, is when you're at a high note, leave that legacy. Let's see. Adobe, no surprise, up 1.7% here in the after hours. Not a surprise. Looked strong. Not epically strong. BNGO. Sorry, wait a minute. Was I looking at everything here for Adobe? BNGO is actually up 2% in the after. See, that just blows my mind because the numbers didn't look that good. See what I'm talking about? Like, this is why I do not trade earnings. Okay? Adobe's numbers come in great, but their CFO announces retirement and the stock goes down 3.4% in the after hours. BNGO announces not great numbers and they're up in after hours. This is why you just don't trade this stuff. You just don't trade earnings. It is so bizarro how earnings work. Revenue 15.4 for the fiscal year. So okay. Let's see if GameStop's out yet. GameStop's still not out. See if there's a time on GameStop. GameStop, it says 4:05, so it's 2 minutes late right now on GameStop. Opposite day. A lot of earnings are opposite day. I would not be surprised if earnings are opposite more often than they align. It's just it's weird. It's very, very weird. I don't know if that's true, but it just, to me, it's too messy how the market reacts to a catalyst like earnings. But yeah, I mean, hey, look at it. The numbers did not sound good at BNGO, at least what we looked at. It's up 2.75%. Numbers sounded great at Adobe, but they announced a CFO departure. Thing goes down 2.61%. Whatever. So I didn't, Thomas, Airbnb and Etsy are not trades for me. I bought both of those. I did. I sometimes I'll buy like a long position before. And my theory on buying long positions before earnings is sometimes I want to be in just in case there's a runaway. It's like, I want to add a little bit to this position. And if it falls, then I just add more. If it goes up, I don't add more. Like, I have not added more to my Airbnb, but I don't like doing a trade off of earnings. But thank you for asking me to clarify my position. I respect that. Still waiting for GameStop here. Still waiting. How low will Tesla go? 550. I obviously I don't know, but Steelcase must have missed. We don't invest in Steelcase. I wasn't even going to look at them, but I will take a quick peek at them here. Oh, now they're talking about Adobe.
314 on the bottom. That's compared to $2.78, and revenue is up 26% to $3.91 billion. That's compared to a forecast from the street of $3.76 billion. Give guidance as well for Q2. They're looking for EPS of $2.81. That's versus expectations of $2.70, and they're looking for revenue, they say, of $3.72 billion. That's slightly above estimates. For the year, they're looking for EPS of $11.85. That's versus expectations.
Yeah, Steelcase missed.
And revenue, $15.45 billion is what they're guiding versus expectations of $15.2 billion. In a release here, CEO Shantanu Narayan saying Adobe, in his words, drove record Q1 revenue, says they're raising their annual targets based on what he calls the tremendous opportunity across our business and our continued confidence in our global execution. They also do announce here that CFO John Murphy will be retiring this year. Back to you all.
Come on, GameStop. We know that GameStop has another executive departure. Oh, their chief customer officer getting fired. Robinhood files for IPO? Shut up. No, is this clickbait?
In this environment, and the fact that this is really a company that has very little or very high barriers to entry and really no competition in what they focus on. And so I think as we look forward over the next 3 or 4 quarters, part of this move to work from home and do more business digitally is going to stay. And I think a company like Adobe.
Yeah, this news is out. Check this out. Whoa. Like everything's breaking on the Bloomberg website. We got yellow bars, we got red bars, we got breaking news, we got Robinhood filing for IPO. Holy smokers. I like Palantir 23. Robinhood Markets Inc. has filed confidentially for an IPO with the SEC, according to people familiar with the matter. Robinhood is moving forward with its IPO, though its listing plans could change. Bloomberg previously reported that Robinhood is planning to file this month. More information is available on the Bloomberg terminal. Really? Well, we happen to have just that device right here. So let's see if you're clickbaiting me. Let's see. Okay. Hold on. And I want to make sure we have this up. Oh, yeah, they do. A representative for Robinhood based in Menlo Park declined to comment. Okay, well, that's not more information. Robinhood became immensely popular. They actually do have more stuff here, though. Robinhood became popular with whatever, stay at home, increased popularity has led to scrutiny. Robinhood has also raised billions of dollars from backers to comply with the request for the industry's clearinghouse. Okay. Focused on the so-called gamification of trading, blah, blah, blah. Nothing on GameStop yet. I mean, there's nothing really of substance here, additionally. Selected NASDAQ as the venue. Interesting. Let's see if we get more news on this. Okay. We don't have any data, though, like any numbers. But again, it's confidential, so it makes sense. So let's see if there might be more on that under the top news. Still waiting for GameStop. Oh, it's taking so long. They totally missed their deadline here. GME? Uh-oh. If GME is running, there must be some insider stuff going on because we got nothing over here. We got nothing in the terminal yet. Yeah, a little bit of a pump happening here at GME. I can't imagine. I mean, then again, look, last time, what's it called? An executive got fired. The stock did well. Yeah, maybe it's the news about the executive. Okay. Executive insider trading, right? I don't see the earnings yet. Let's see. We can pull up. GameStop, okay. When's the earnings call? Let's see here. 5 p.m. So the earnings call is in about 50 minutes. But yeah, the earnings aren't out. And the thing's rallying. I can't imagine it. I mean, was it the executive news? Because we talked about the executive news like 13 minutes ago. And I mean, maybe because last time one of them left, the stock did well. Remember when the CFO left? The stock rallied on the news that the CFO left. So maybe we just got early access to that news or whatever. And maybe that's what's pushing it now. Could be. How is the earnings call already going? It says it's scheduled for 2 p.m. Really? Earnings call? I mean, I'll look. I'm on. Okay, so the call is already full. Cannot join. Okay, well, we could look on Bloomberg here. Let's see. Let's see what else we get it here. I'm surprised by that. Sorry, not Robinhood. Let's look at GameStop, GME. See if we can get under company events. Okay. Earnings call is not going, you apes, says someone. Oh, God. So let's look at individual company news, earnings call estimate. Where's company events? That's what I want. I'll find it up here. Company events. EBT. Okay, here we go. So it looks to me, well, earnings aren't actually out yet. We've got, here's the call. That's for today. It says 2 p.m. So it's actually not up yet. Okay, but I can call, I'll call in. 877-451-6152. We'll call in for that. Let's see if we get the numbers yet, though. Nope. Still no.
The next available conference specialist will be with you momentarily.
Huh? Just want to put a pin in. What's this? I think we're too early for this. I'll put the pin in anyway. 1 3 7 1 5 5 6 7. No.
Welcome to the Viavid Conference Center. The next available conference specialist will be.
I don't want a conference specialist. I want my pin. Just do what I want. All right. Why? Yeah, earnings call starts at 5. Yeah, my name's Meet Kevin. I'm trying to listen to the GameStop earnings call. I got to get some tendies.
No problem. Your first name, you say Meet?
Yeah.
Can you spell that for me?
MEET, not the other kind, not that kind of business.
And Kevin's is Kevin?
Yeah.
Got it. And what company do you work for? You're a private investor.
Meet Kevin.
Got it. All right. Let me join you through the GameStop. You know, it doesn't start for a little while, but we can join every.
I want to wait.
Gotcha. Yeah, no problem. Just want to let you know. I'll
Thanks.
join you through now. Stand by.
Okay, cool. All right. I'll leave that on in the background then. Okay. All right. Where are earnings? Okay. So let's see here. All right. I don't. We got nothing. Like, come on, GameStop. You're making us wait. You said 405. Here, maybe I'll lower the AI importance. Oh, it's already at the lowest. This just filters the news, so I make sure I get everything. I can't lower it anymore. All right. Well, fine. Look at top news then in the meantime. So we still have, nothing from GameStop. Okay, fine. Powell, GameStop, meet reality of earnings. GameStop meme stock loyalists meet reality of earnings. Top live. Looks like investors are a little impatient with the stock already rallying in post-market trading without any numbers out yet. That's funny. All right. So, okay. The conference call is at 5 p.m., so I guess this could potentially be a long wait. Yeah. How do I chat in this? I want to chat in this. This is a blog. Get me in. Highlights? I can't chat anywhere. That'd be cool if I could. Can I chat? Stop it. Can I chat here? No, that's just the red bar. Darn it. Okay. Where are the numbers? Still no numbers. Okay. Fine then. Start an OnlyFans, but make it only stocks. That's great. All right. Fine. Go to the sticks. Premature. Oh, God. This is a mess. It's a disaster. The day is it's a horrible day. Everything's broken. Everything's broken today. Okay. So, After Hours Marcus Corp is running. Oh! What is this crap? You gotta be kidding me! Look at this. What is this? How could you do this to me? Nobody can even see it. Yeah, there you go. Look at that. How could you do that to me? This is garbage. Horrible. That's fine. We'll pull it up closer to 2 p.m. Because honestly, it ain't 2 p.m. yet. And that music's going to get us demonetized. All right. Where is it? We are anxiously waiting our attendees. GME earnings and earnings call. We'll put that in the title. GME earnings and earnings call. Okay. GameStop announced PC download, says someone. Cool. Like, they should have done that 10 years ago. If they did that 10 years ago, they wouldn't be in this predicament. But hey, coulda, woulda, shoulda. What's the blog say? Overall interest in GameStop peaked in January and has fallen since, though it is still above levels last year, according to Google Trends. Can I? Oh, I could pull that up on here? That's cool. Let's try that. Let's try that. Let's put an interest in attendees. Okay. Oh, look! GameStop comes up. See? It's a sign. It's a sign. We typed in interest in attendees, and GameStop is the first thing that comes up with an article that says the GameStop frenzy hasn't ended yet. That's a sign. If that's not a sign, I don't know what is. That's good. Okay. How do I get that search? Google Trends within the terminal, though. That's pretty cool. Yeah. Oh, web results. Okay. All right. Still waiting. Still waiting. See, look, they have a banner. I need to get a banner. Oh, wait a minute. We have a banner. We have a banner. See? There's the banner. That's all we needed. We needed the banner. Get 30. Oh, wait. No. We gotta lighten the mood because it's a rough day. Make sure to get 38% off using that course coupon code linked down below, HODL, because we want to teach you how to be hodlers and long-term investors and make money and build wealth over the long term, while we talk about tendies in the short term. Consider checking out that coupon code before Friday when it expires and the price goes up. Okay. Let's go back over here.
I was going to start more broadly on Take Two, but given we were just discussing GameStop, I have to ask, I mean, how closely have you been watching this saga? Of course, it's a company I imagine you know fairly well.
Well, we know the company as an operating matter very well. As a stock speculation, I would say we don't know it all that well. And I don't think that the way it's traded has reflected its fundamentals for quite some time.
I mean, in the future, do you expect that games manufacturers like yourself will always be straight to the consumer and won't maybe need a retailer as much as in the past?
No, not necessarily. All of us are working on direct-to-consumer offerings. And of course, you can buy directly from Take-Two and from our competitors now. We value our retail relationships, whether they're physical retail or digital retail, and they will absolutely continue because we want to be where the consumer is. I think the issue for GameStop is just
trying to write off the GameStop
goods to digital goods. And of course, we're seeing that in the industry. And over time, I suspect that the business will largely be digitally distributed.
Final one on GameStop, Strauss. So do you think they can pull off a turnaround and be a real e-commerce retailer?
They have a great management team. I absolutely think they can do that.
He's being nice.
Even in success, does the valuation currently make sense? And I'll leave that as a question.
Strauss, let's get back to your core business. And I guess we've been talking today about various reopening trades and if they pull back a bit. And of course, there's great expectations of a big economic rebound, which we hope materializes. When that does materialize and things do reopen, does your broad business area see a bit of a pullback in terms of engagement?
Well, one might have thought so. After all, we certainly did benefit from people sheltering at home. It's challenging.
You can listen to this guy talk about the earnings really quick, what to expect.
Anticipating it after the bell, it's going to be GameStop, of course, the Reddit fueled
are going up, and I may miss a chance.
Oops.
These corporations are saying, better sell more debt because the
deals
may go higher. So, yeah, there's been just a big supply hit that's adding to,
Hold on a second here. Let's close that. Let's make sure we have GameStop up because we do not want to miss the earnings coming through. But I do want to listen to this guy's preview here. We still don't have it, so let's get rid of Etsy. Let's get rid of. Okay, this is the video we wanted to watch. What is this though? Users on Reddit are growing impatient and asking when the company's results will be posted. Usually they are announced a few minutes after the market close. And as Andy just mentioned, it also appears that GameStop's conference call is at capacity and people are having trouble dialing in. We're already getting word that some people are having trouble connecting to the investor call. LOL or LMAO. How many of you degenerates are on the GameStop earnings call? Won't even let me listen. Wow. Okay. Fascinating. Let's oh, there it is. Misses EPS. Earnings are in. Okay. It's a miss. Adjusted EPS came in less than expected. It came in lower than expected by 10 cents. Sales of $2.12 billion. Comparable same-store sales were up 6.5%, but still missed estimates for growth. Those console sales did not pay off tendies. Let's break down the actual results here. Increase of 6.5% in comparable same-store sales, with global e-commerce sales increasing 175%. Expense reduction initiatives drove $409 million or 21% in SG&A improvement. Basically, they fired a bunch of people. Let's quickly see how the stonk is reacting here, not GME. It is flat here. Let's go. We'll just put it. I don't know. We'll just put it somewhere right here because whatever. It's not so important. I want to read this. Strengthen the balance sheet with $635 million in cash, laying the foundation for a transformation. That's good. We know that the chief customer officer is resigning. We've got net sales were $2.12 billion compared with a little bit more last year, reflecting an operating environment that included a 12% decrease in the store base. So in other words, closing stores. We've got, let's see here. Gross margin was 21%, a decline of 610 basis points. In other words, a decline of 6% percentage points, reflecting an expected mix shift toward lower margin console sales. That's not good. A lot of people were hanging their hat on those console sales, but those are actually lower margin. Increased freight and credit card fees associated with shift to e-commerce sales. This is the thing, folks. Like, stores do not know how to transition well to e-commerce. Target had the same problem. The same freaking problem. Margin going down with e-commerce sales because they don't know how to spend money properly. They don't know how. They don't have the factories and the robots that pretty stable actually here in the after hours that Amazon has. I don't think anybody's actually going to sell this thing. Like, certainly nobody off Reddit's going to sell this off earnings. We want to hear what's coming up. Income tax benefit due to a change in tax status, 18% decline on the SG&A. Net income was $80 million or $1 per share, which actually puts them. Okay, well, this is quarterly. So wait, hold on. Diluted earnings per share of 32 cents in the fourth quarter. So actually better earnings per share here. Adjusted income was $1.34 for the quarter. Okay, what else do we have here? Let's look at overview. And do we have any projections? Let's see if we can get projections. Projections. Delivered $408 million or 21% reduction. Yeah, we saw that. Okay, this is redundant. Here we go. I'm proud of our entire organization. It came together in 2020. I mean, they did better than 2019. Our execution led to a profitable fourth quarter and everybody buying stuff at GameStop because of attendees. We are off to a strong start in 2021 as February comp sales increased 23%. That's really good. That's actually a really good number here. 21% increase in same-store sales in 21 to 2020. Now, again, we got to wonder how much of that is from people going to get their, spending their attendees on GameStop at GameStop. But that is a really good number here. Very, very, very good number here. That's going to help this stock out a lot. So this should really push the stock here. Led by continued strength in global hardware sales. As we look ahead, we are excited by the opportunities that are in front of us as we begin prioritizing long-term digital and e-commerce initiatives. Okay, increase our delivery speed, expanding our catalog. Good. What else here? Capital structure and liquidity updates. $635 million in cash and a pop in February data. Really, really good. Those February same-store sales figures, very, very good here. So as of Jan 30th, the company had 147 or 46 million of short-term debt. They could literally pay off all of their debt with the cash they have. That's really good. Very, very, very good here. Okay, so that's good. Corporate update. Okay, let's see here. Company added 3 new board members, including Ryan Cohen. Initiatives to accelerate the company's transformation. That's good. Appointed a new, let's see, since the committee's foundation in late January 2020, the company has appointed a new CTO, Chief Technology Officer. We'll see how that goes. The company is continuing to actively pursue senior talent within e-commerce, retail, and tech. Company is continuing to position its brick and mortar footprint and digital assets to capitalize on emerging gaming console and additional gaming opportunities. Good. Strategic initiatives. Building a superior customer experience, expanding product offerings. So customer experience, this could be big, right? If they actually transition to doing like a, like competitions in the store again, which they used to do. They did a lot of competitions in the store in the past. But we really got to focus a lot on how do you convince people to get in the store, right? That's what's important here. So this is actually good. The more we're reading about this, they're on the right page. That February comp data is going to be really bullish for people. People definitely get, okay, somebody in the comments just said GME positive. I haven't looked yet, but that doesn't surprise me if they're giving that kind of forecast or update on February data. Company will focus on transformation. Okay. We had the call-in number. We know. Gap, fine. Let's see. Cautionary statement regarding, this is just to prove, okay, this is generic. Not a big deal. Okay, GameStop data. This I want to see as well here. I want to just double check here. Are they going to have, am I going to be able to stream this? Let's just quickly see here. Okay. So listen to webcast. Let me just pop in here really quick. Log in. What is this? Oh, great. Complete this form to enter webcast. All right. Hold on a sec. Let's just listen to for a sec what they're saying here.
See, they have not been addressed.
Oh, 8%. There you go.
Surge. They have
That's that data.
Offering as a lot of people expected. Joseph, what are they? Are you talking to them? They telling you anything?
They are very tight-lipped. They've been very tight-lipped about this whole situation. They don't really want to get into what's going on. They're trying to just stick to their strategy and become more consumer-oriented, more digital, and really going after the consumer in that way, which is the shift that we're all talking about, becoming a more digital company, less reliant on the physical. And yet the company's not really talked much about what they want to do. They've not talked about accessing the capital equity markets to raise some cash. They've not talked about anything they might acquire to accelerate their transition and transformation from the current status that they're in. So I know there's a lot of hope out there, but
yeah, we'll see. Okay, let's see. So I've called back in, or I'm going to call back into this number. What? Yeah, whatever. Let's look at the numbers. So, GameStop here, what do we got? Net sales. Yeah, we saw that. The SG&A, we saw that decline. Goodwill impairment, that's fine. Income tax benefit, okay. It's going to mess with the numbers here a little bit because they're not paying tax. So the net income is going to look different. That's why that's why you have the EPS growth that we saw. The earnings per share growth, a lot of that is coming from the income tax benefit here. Okay, this music's gonna demonetize us. Turn this crap off. Okay, so yeah, EPS. Yeah, that's the big move. And see, if I took out the income tax benefit here, well, it's because they're losing money. Let's see here. If we took this out, operating earnings of 18. So earnings before income taxes of $10 million. Okay, I mean, so they'd still be positive, but it'd be a lot. Yeah, it would, the EPS would not be as good here. I mean, 10 mil divided by how many shares are outstanding? I don't know. It doesn't matter. We don't have to do the math right. Oh, there we go. 60. Yeah, I mean, so you would be at, basically you'd be doing 10 divided by 67, right? 10 divided by 67.8. Oops, that's not a 10. There we go. You'd be somewhere around 14 cents of EPS without that tax benefit there. So not good. The forecast for February was good. Obviously, getting into the earnings call is going to be funny. But we will see what happens here. Let's look at what else is going on in the aftermarket. I wish they would just stream this. Usually they just stream this. So maybe we'll get lucky and we'll just get a stream on that. But let's take a look at what's going on in the after hours here. I thought I stayed on the call too, and then I looked and it said call failed. So kind of got burned. So ears is up 7% in the after hours here. GME, yeah, trending up here. Trending up on these reports here. We've got, let's go to all stocks. How's everything doing today? BNGO's up. Hello? Oh, yes. Hi there. My name is Meet Kevin. Yeah, I got disconnected. I got a call failed. I was waiting for tendies.
Waiting for which call you was trying to join?
Oh, yes. GameStop.
Sure. What's your name? I'll place you through.
Meet Kevin.
I couldn't hear you. What was it?
Meet Kevin.
Your phone is breaking up.
Oh, no. Meet Kevin.
It's really breaking up bad. That's probably why you disconnected.
It's breaking up bad. That's not good. Now, how am I going to get my tendies? It's Meet Kevin. M-E-E-T and then Kevin. Yeah, Kevin. Sorry, I go by Meet Kevin. So M-E-E-T is first and then Kevin last.
Oh, okay. One moment.
Thanks.
You're a private investor or you have a company?
It's a company called Meet Kevin.
Oh, okay. That's your company name.
Yeah, exactly. And we bake our tendies there.
Sure. And your name is Meet Kevin?
That's right.
Okay. I'll place you through to the GameStop. One moment.
Thank you so much.
You're welcome.
Okay. Well, I hope it doesn't call fail again. Let's see what happens if I put it in this. Watch, it just immediately disconnects and implodes. That'd be funny. Not really. But I'm trying to get it. I wonder if I could get it to play through HDMI. See, that would be money. Then I don't have to hold the darn thing. I can put it on phone. Dock connector's on. I have no idea. All right, whatever. We'll just leave that on. Hopefully it doesn't call fail. So that if I have to hold it, I'll hold it. Big deal. You'd think if you plugged an HDMI in, though, it would be able to like play this out. Unless there's is there an audio out on this? Oh, maybe that's what I got to do. There is an audio out. I could do this. Here, listen to Sarah for like 1 minute. I'll be right back.
Details, Deirdre.
Here, breaking news anyway.
Hey, Sarah, that's right. Amazon has named its next cloud boss as current chief Andy Jassy gets ready to take over that top position from Jeff Bezos later this year. So it will be Adam Selipsky. He is currently the CEO of Tableau, and he will be the next CEO of AWS. This is a unit within Amazon that has a more than $50 billion run rate. It is the number one player in the cloud space. And in a note to employees, Jassy notes that Selipsky, while he's coming back, he's not a new face. He was hired back in 2005 After more than a decade, he left to run Tableau in 2016. And of course, it was then acquired by Salesforce. And he stayed on with Salesforce, became part of its executive leadership team. So now he is going back to Amazon. Jassy says that happens on May 17th. He says that he and Filipski will spend several weeks together transitioning before Jassy himself takes over that top job for Bezos and Filipski officially takes over that CEO cloud job. And Sarah and Wilf, this is, of course, one of the most important jobs in the cloud space, if not the most, because Amazon has just become a force to be reckoned with. It had an early head start in this business and just dominated the field. Microsoft and Google have been trying to catch up ever since. So it's a very big position and likely a loss for Salesforce. Mark Benioff has really sung Filipski's praises over the last year and called that software acquisition of Tableau possibly one of the best software acquisitions of all time.
Yeah, no, we saw that in the stock as well of Salesforce. Deirdre, what's happening with AWS, the cloud business? Has had such a tremendous run, has been the profit engine of this company. What's happening to that growth rate as more competition comes from Microsoft and Google?
Yeah, so that growth rate is moderating. Last quarter, I believe, Q4 of 2020, growth of 28%, which has come down over the years, but many would attribute this to the law of large numbers. This business is just so much bigger than that we see at Google and Microsoft and others. So still the dominant player, and it's moved really from...
All right, I got it. I got what I need. Look, this is for us to get this call. You got the right cable. XLR to iPhone. So anyway, that should solve the problem. We will see. But anyway, the call starts in about 19 minutes. So I guess you could go make some coffee for 19 minutes. GameStop right now flat in the after hours here. Oh, it's kind of falling a little bit. Okay, so we don't want to hang up. Let's see. Plug it in. Okay. This is our tendy maker right here. And when do I ever play audio through my iPhone? But I guess now we can. Now I have to go plug this in somehow. All right, we'll figure this out. We can make this work. We will get our meat today. And we will define meat, Kevin. It's going to happen. Hold on a sec. Here, stare at the tendy graph for a moment. 1 sec. I gotta go over here, and I gotta plug it in somewhere. I don't know, which one should we pick? Audio 3? Sounds good to me. Okay, here we go. Hope I don't ruin anything. There we go. Okay. Let's see if we got audio now. Let's see. We got it. We did it. We did it. We got it. We got the phone. We got the call. Cool. All right. Let's listen to this Robinhood news.
Confidentially filing with the SEC. Guys, back to you.
Thanks so much for that one, Kate. Goldman Sachs, meantime, taking new steps to help burnt out bankers. And now Citi is doing the same. Find out if the company's...
Well, all right. We already knew that they filed. Robinhood filed there. So, all right. What do we got here? Oh, Kudlow. What's Kudlow got to say?
It's going to aim for a universal basic income provision when it's all over. So let's bring in Dan Clifton, expert on all things Washington from Strategic.
Okay, hold on. Let me just make sure call's okay. We got the call. All right, what's over here?
It doesn't look like much of an infrastructure package. Buttigieg wants to subtract roads. He's not really a car guy, as it turns out. And you got a lot of welfare stuff in here that they want to make permanent. It's going to cost a fortune, and they're going to pay for it by raising taxes, which could wreck the economy. Go ahead, Dan. Am I being too pessimistic and bearish here? Tell me why I'm wrong.
No, Larry, I think you're being realistic. I mean, let's go back to the COVID-19 package. We're all for vaccine distribution. We're all for opening up the schools.
All right. I don't really want to hear this about the Biden. You don't know what I had to go through to get that cable. let's just say where I went is now a disaster. But we got what we needed. So let's see here. Bloomberg. Let's try Bloomberg TV. Let's see what they're talking about. Bloomberg TV. TV. Bloomberg TV. All right. All right. Let's see. Here we go. Let's see what they're covering. Okay, we got 16 minutes to the call.
This time around, the response was really rapid, was really timely, and powerful enough so that we can see the economic recovery as powerful as it is right now, and we are expecting an even stronger economic growth. So in that sense, I think they just confirmed our expectations. But in terms of new information on what to expect on inflation or any other things, I did not really hear anything new.
Yelena, you talk about the powerful recovery, and we did see, at the moment, we're getting this drip feed of data that just doesn't look so pretty because of February, the weather once again hitting the likes of US new home sales. But is that just something to quote a rather famed Fed chair, is it transitory?
I think so. I think February data is really tricky. It's kind of in between a strong January and what we expect to be an even stronger March data. So you mentioned housing, and yes, I think it was the decline in new home sales and existing home sales was at least partially a result of harsh weather. If you look at mortgage applications to purchase, for example, we anticipated a decline in home sales because mortgage applications actually dropped quite significantly during the week of that freeze in the south of the country. And since then, they recovered for 3 weeks in a row. So I expect March will be a much better and more informative in terms of what happens to the housing market.
Okay, so we are still about 14 minutes away from the call, kind of right now, just listening to Bloomberg here talk about inflation forecasts. Bloomberg economists agreeing that there might not be large inflation coming. Keep an eye on Bloomberg here. In the meantime, yep, that's our waiting music for the GameStop earnings call. Let's go double check here the top news. We do have news of Robinhood filing for IPO confidentially. There was a rumor of this happening earlier. Yeah, let's see if they've updated the story at all. Let's see here. We've got Robinhood. Nope, no updated story here. So actually nothing particularly new here. Looking at the sticks presently here, we have, let's see, we've got Upstart down about 1.6% after falling at 28% today. That's a pretty rough fall here. We've got how did we close here? We closed up on Peloton, Zoom, and Peloton and Zoom and Netflix and Costco. Kind of goes to show you the weirdness of the day we had today. MP Materials slid all the way down to 18%. Microvision cost 11%. We've got QuantumScape down 10%. Gevo, EXPI, Macy's, Clever, lots of pain here. CCIV back into the 24 range here. Really toyed with our box today. We've got, where's Tesla in today? Let's see. Tesla. Oh, did Playboy report earnings? I heard PLBI. That's right. They were reporting today. Oh, up 5% on the day and up another 6% in the after hours here. Playboy. Let's see here. What is it? PL. There we go. This one. There we go. Individual company news. We are 12 minutes away. Playboy Group raises a 2021 outlook to project revenue exceeding $200 million. Playboy Group reports Q4 revenue of $46.3 million with a consensus of $35.8. A nice beat of somewhere around 10. How much do we want to say? 10, 20. Well, let's see. Consensus was 10, 20. Almost 30%? That's actually pretty good. Not quite 30%. No, because it's about 11 million. So I don't know. Whatever. They beat. Let's see. Let's just do the math. There. Stop being lazy and do the frickin' math. 29.1%. Freaking nailed it. Not quite 30%. Nail it. So, yeah, narrowed Q4 profit, raises 2021 revenue projections, operating financial condition, financial results. Let's look at the financial results here. While we, in the meantime, just make sure that call's still there. Still there. Still there. Oh, what's this? Hold on. Let me double check it's still there because something just popped up. I hope this is not call failed again. Okay, here. No, hold on. Darn thing. Okay, let's make sure it's still there. Here we go. Come on. Push it. Find the dip. Find the dip. Okay. It's still there. It's still good. We're good. We're good. We got the call coming up in 10 minutes. Okay, so looking at Playboy's numbers here. What do we got here? Playboy up 89% year over year to 148 mil. LA, leading pleasure and a leisure lifestyle company. Wow. Let's actually just go to their numbers. I can tell you, I've never looked at the Playboy numbers here. Let's see. Can I view these a little bit better here? There we go. So what do we got here? Net revs. Wow. Wait a minute. These are the quarters here. Okay. I mean, that's really good growth. Cost of sales. They more than doubled their net revs, and they didn't double their cost of sales. They did up their SG&A a good chunk here. About a 50% bump in that. Interest expense. Still losing money, though. Actually lost money. Wow. Okay. Let's give it up for Playboy. We are now 9 minutes away from the GameStop earnings call. Kevin, I only read Playboy for the numbers. Yes, you get a subscription for Playboy for the market analysis. Okay. Yeah. All on the same page then. So let's see what the comments are here. Company names Amazon veteran Owens to lead operations. Earnings miss, but shares gain after report. Retailer looking to hire more e-commerce specialists. Yes. Guidance remains suspended. Well, they did give us comp data for 2021. This is incorrect. They gave us data for February that comp sales were up. Maybe that person didn't read that. Unless I dreamt it, I saw that. I think we all saw that. The comp sales for February being up. GameStop Corp, the roller coaster stock championed by Reddit-based traders, appointed tech veteran Jenna Owens as its new COO. Okay. It's worth noting that companies across the board have a renewed focus on e-commerce. Most recent earnings example is Nike, which said the same. Cool. Music's still there. Looks like GameStop is tweaking what it reports going into 2021, the company believes total net sales is the more appropriate metric to evaluate performance of the business. Okay, total net sales. As a result of the prolonged pandemic-related store closures, will have an impact on the calculation for comps. Okay, so basically saying, judge us by our top line number, not by our bottom line number. Okay. What else here? We are getting a glimpse of the company's new strategy through its press release. This year, the company will be... Yep, we did see this. We'll just copy and pasting here. GameStop earnings miss top and bottom lines, proceeds to moon as expected. That's priceless. As GameStop tries to pivot to e-commerce, here's a key line from the earnings release. Global e-commerce sales, including comparable sales increased. Right, exactly. Overall sales have dropped. E-commerce sales have increased 191%. It's good, but again, from what number? From what low? GameStop doesn't currently intend to report comp sales in 2021, but again, we got the Feb data, so that was weird. There's the press release. Okay, cool. So we're now 6 minutes away from the call. Yeah, which apparently has been like impossible to get into. Hopefully it doesn't like put us through and it's like, yeah, call full. Nope. So far, so good. Just do not touch the phone. Just to be the worst is like call failed right as it begins. Oh, that would be something. Probably get a bunch of unsubs then. GameStop now falling. Suits are taking over. Yep. Let's see what happens. Oh, yeah. Woo. Time for some more coffee. Hold on. Yes. Oh, I'm out of straws. That's a bummer. Oh, no, here's one. Found one. GameStop now down 3.4%. See what's on Robinhood. Or not Robinhood, CNBC. Why did I say Robinhood? I don't know. I don't even know. No, Robinhood's on commercial, it looks like. Yeah, Robinhood's on commercial. We've got Fox commercial. And we could go to Bloomberg while we wait. Let's see here. While we wait, we may as well listen to Bloomberg. Where is it? It's not here. It's not. Nope. That does not seem. That's not the right audio.
To play the tech space as well. But also you have to look at things like energy stocks, for example, because I think they've become such a global proxy for kind of growth and economic growth out of China, economic growth out of the US. And yet their kind of prices are controlled by OPEC, by the US shale producers. So there's a lot of push and pull there. And I think for me in the next year, it really tells you what era are we in? Are we in this era where oil is still a really big part of our lives, or is that kind of era of tech really taking hold?
Tech.
A good way to
EV,
leave it when we had
Tesla,
such a sell-off in the day
Moon.
with the oil markets. We thank you. Catch her on the MLive blog. She always has really great takes. Meanwhile, Joe, I mean, you just started tweeting what she's looking at.
No oil on the moon.
What are you looking at in the next couple of hours? What are you looking at overnight at that 4 a.m. check on the phone?
Yeah, I'm looking at the prices of the NBA Top Shop digital trading cards, which, like everything else, have actually been coming off from what I've been following over the last week or so. So that's sort of that's the classic leading.
I don't know how I feel about a black tie with that. Like the jacket I like, but the black tie, I don't know about that. For the suit,
bandwagon. That does it from what you missed right here, right now, though.
Bloomberg Technology is up next. Have a great evening. This is Bloomberg.
What'd you miss? Well, if we're talking about Janet Yellen and Jerome Powell, nothing, because that was garbage. Good. GameStop. Crashing. Oh, you know what we haven't done in a while? We haven't looked at the short interest for GameStop. So let us do that. Okay. One of these windows will be the correct one. Nope. Don't worry, I'm good at organizing my desktop. Don't mind me. Oh, honestly, I blame Bloomberg. It operates like a Mac or a PC on a Mac. It's nuts. Yeah, and I did say PC on a Mac because that's what it does. What was I going to look at? Oh, short interest apps. Let's see. Thank you for saving us from having to call. Oh well, as long as I don't get it, thank me after. Let's make sure everything goes without a hitch. Are you going to ask questions? I don't think I can ask questions because you have to ask the questions in advance. Like the questions are already prepped in advance. Usually, you submit them and then you get your opportunity to ask. I mean, I could try, but I worry that if I push a button or something to ask a question, I'll end up getting disconnected or something. Hold on, let's see what's going on here.
Of many big picture conversations. Citigroup CEO Jane Fraser telling staff that she's banning internal video calls on Fridays. This is an effort to encourage staff to set boundaries for a healthier work-life balance. The bank also reportedly instituting a firm-wide holiday called City Reset Day to combat pandemic-related fatigue. Separately, a Microsoft survey of global workers finding the majority of employees say they're struggling or just surviving in pandemic work conditions, with a large percentage considering.
I mean, I'll tell you, it sucks. Just being stuck working from home all the time. But take a look at this. The GameStop short interest actually ticked up. Look at this. It had a tick up. It was, it's obviously plummeted to 13, 14%. I want to say at a low over here, something like that. And now it's ticked up to 15%, it says here. That's incredible. I don't want to do this. I don't want to get the call starts in 1 minute, but I'll do one for you earlier here. Okay, so that one's 6.89 CTRM. Fine, I can't do more of these. These drive me nuts. 0.55%. Okay, so the call should be beginning any minute now. Okay, so I don't think CNBC is going to have anything for us here. They're talking about fatigue. So we are waiting. Okay, here we go. Bloomberg's on commercial. And Fox has Larry.
Obama on a range of issues. So there's kind of a combo here. Biden, Harris, Obama administration. Maybe it is a multiple choice question. We report and you decide. Thanks for Kudlow. See you tomorrow night.
What? The laugh.
Not a crisis, it's a laughing matter.
Oh. Oh no, it's still music. No, it's 2:00. Where's our stuff? Where are our attendees? It's 2:00. It's time for the earnings call. We don't have time for this crap. We don't have time for delays. You said 2:00. You said you'd release the earnings at 2:05 or 4:05. You released them at like 4:20. Oh my God, did they release them at 4:20? I was joking, but that would be hilarious. I gotta find out now.
Participants are in a listen-only mode. If anyone should require operator assistance during the conference, please press *0 on your telephone keypad. As a reminder, this conference is being recorded. It is now my pleasure to introduce your host, Eric Cerny, Investor Relations. Thank you, Mr. Cerny. You may begin.
4:30. Yeah, 4:27.
Thank you and welcome to GameStop's fourth quarter and fiscal 2020 earnings conference call.
Is that loud enough?
We'll include forward-looking statements which are subject to various risks and uncertainties that could cause actual results to differ materially from expectations. Any such statements should be considered in conjunction with the cautionary statements in the safe harbor statement in the earnings release and risk factors discussed in reports filed with the SEC. GameStop assumes no obligation to update any of these forward-looking statements or information. A reconciliation and other information regarding non-GAAP financial measures discussed on the call can be found in the earnings release issued earlier today, as well as the investors section of our website. Joining me today is GameStop's Chief Executive Officer, George Sherman. On today's call, George will share insights into our business and strategic framework for the future, followed by a review of the financial results and strategic direction as we head into fiscal 2021. Please note that we will not be conducting a Q&A session as part of today's call. What? Now, I would like to turn the call over to the company's Chief Executive Officer, George Sherman.
Good afternoon, everyone, and thank you for joining us today. Before reviewing our results, I'd like to take this opportunity to personally thank our entire GameStop team for all that it has accomplished over the past year. Throughout the year, we worked incredibly hard to meet our customers' needs whenever, however, and wherever they chose to shop amidst the pandemic-impacted backdrop. I'm so grateful for our team's dedication to our customers and our brand. Fiscal 2020 was an unprecedented time. Our full-year results reflect our organization's adaptiveness and focus on navigating the various operating challenges presented by the pandemic. I am particularly proud of how our team members met the expectations of our customers by greeting them during curbside pickups, packing orders that ship from stores, assisting with online orders, and offering advice to customers in store. During this time, our top priority was safeguarding the health and well-being of our associates, customers, and communities. As you recall, we closed the majority of our global fleet during the height of the pandemic, resulting in a significant reduction of operating days compared to 2019. When stores were allowed to reopen, we operated under limited hours and at reduced capacity in many locations. And several of our operating countries returned to full store closure protocols later in the year. During this time, we worked diligently to plan for safe reopenings and introduce more members of GameStop's loyal customer base to our e-commerce capabilities. In terms of operational initiatives, we accomplished the following in fiscal 2020. We delivered a 191% increase in global e-commerce sales to represent approximately 29% of total net sales, up from a low single-digit percentage historically, and reflecting investments during the year that enhanced our e-commerce capabilities. This growth allowed us to recapture a substantial majority of our sales from temporary government-mandated store closings and leveraged our improved fulfillment capabilities, including the initial rollout of same-day delivery and several flexible payment options, which helped to facilitate sales and improve the shopping and delivery experience. Deliver over a $400 million reduction in our reported year-over-year as a result of ongoing cost optimization efforts. This, combined with an SG&A reduction of 100, adjusted for severance and transformation costs, has resulted in a total SG&A decline of over $530 million over the last 2 years.
We read this already.
We continue to transform our physical store presence through ongoing market optimization and global dedensification efforts. This resulted in closing a net 693 stores and reduced store operating costs for the year, while transferring some of the sales online into neighboring locations. We enhanced our financial position and flexibility with a stronger balance sheet, reflecting significant improvements in inventory management and related working capital, a healthy overall cash and liquidity position, reduction in overall debt, and the completion of an exchange offer for our March 2021 notes. Overall, we're pleased with the work we accomplished to achieve our objectives and stabilize and strengthen our business operations. That work, particularly as we explore options for our European businesses, which may include further store closings, exiting unprofitable businesses, or investing in e-commerce capabilities. As we go forward, we are focused on transforming into a customer-obsessed technology company that delights gamers. We create a differentiated customer experience that positions us to access, engage with existing ones, and reactivate former ones. We are maintaining an intense focus on lifetime value. To execute on this mission include: 1, investing in technology capabilities, including by insourcing talent, revamping systems, and evaluating next generation assets. We continue to build out our team expertise in this area, noting our recent addition of a Chief Technology Officer and Chief Operating Officer to the senior leadership team. 2, building superior customer experience, including establishing a US-based customer care operation. We are focused on providing exceptional customer service levels across all channels, regardless of where, when, or how our customers shop with us. We are accomplishing this with a technology-driven approach, along with leveraging our streamlined retail footprint to provide an unparalleled service proposition with a focus on surprising and delighting our customers. To this end, we have recently added a Senior Vice President level head of customer care and other new additions with e-commerce backgrounds to the senior leadership team. 3, expanding our product offerings. We are continuing the work to expand our addressable market by growing GameStop's product catalog. This includes growing our product offerings across PC gaming, computers, monitors, game tables, mobile gaming, and gaming TVs, to name only a few.
No Q&A.
These categories represent natural extensions that our customers would expanding our addressable market size by over 5 times. Will reduce our reliance on the cyclicality of the console-based gaming market. 4, modernizing, improve speed of delivery and service. We are improving our distribution network to coincide with the continued optimization of our store footprint. This will enable us to provide customers convenient, flexible, and competitive delivery options across the entire product spectrum. With our recent additions to the senior leadership team, we are quickly evaluating additional distribution options to improve delivery speed. This group is also working to further optimize our warehouse management and order management technologies and other capabilities that will improve the experience for our customers. We expect to accelerate these and other elements of our transformation while continuing to focus on allowing the company to build upon its progress and capitalize on the emerging console cycle. The progress we have made over the past 2 years positions GameStop for long-term growth and to deliver value for shareholders. Now turning to financial results. I'm very pleased with how we navigated a challenging environment and all that we achieved in the fourth quarter in fiscal 2020. Specific to our fourth quarter results, sales were $2.1 billion and comp sales increased 6.5%.
I really hope they don't just read the financial statement, because so far that's all they're doing. I hope not.
Of total sales in the fourth quarter versus 12% of net sales in the prior year period. These results were reflective of the increased console demand as we transition from Generation 8 to Generation 9 console gaming products from Microsoft and Sony. Our 6.5% comp growth marks our return to positive quarterly comp sales growth, which we achieved despite further COVID-19 mandated closures around the world, particularly in Europe, the most challenging industry-wide shipping crisis realized during the holiday period, and severe supply limitations of new products. Notably, console demand remains more robust than we can meet with supply from console makers. We continue to see sell-through rates for our console events in a matter of minutes. In the fourth quarter, we estimate that additional pandemic-related store closures mandated by local governments led to a reduction of approximately 27% in European store operating days versus the prior year fourth quarter. Regionally, Australia was the strongest performing region given minimal disruption at the stores and delivered a nearly 30% comp increase. Building on that momentum, 2021 is off to a great start. Led by positive 23% comparable sales in February as we continue to benefit from the launch of new consoles and the accessories and games that come with that product. Further, total consolidated sales for February were up 5.3% versus last year, despite having permanently closed about 12% of stores globally through dedensification efforts and losing over 36% of store operating days in our international business units, primarily in Europe, due to pandemic-related temporary closures in the month. From a product margin standpoint, overall gross margins were 21.1%, down 610 basis points from our more software-led 27.2% gross margin in the fiscal fourth quarter last year. Decline was driven by an expected increase in mix of lower margin hardware sales, a continued increase in industry-wide freight costs, credit card processing fees driven by our higher penetration of e-commerce sales, and a broader promotional stance. $119.1 million, reflecting the $92.6 million or 18.1% versus the reported SG&A in the fourth quarter last year, and representing approximately 340 basis point improvement on a percent to sales basis. The decrease was driven by a combination of tight expense controls, particularly lower store cost and corporate G&A expense, and to a lesser extent, sales leverage. On an adjusted basis, SG&A declined $68.4 million or 14.1% year over year. We reported operating income of $18.8 million on a reported basis compared to operating income of $75.2 million in the prior year fourth quarter. Adjusted operating income was $28.9 million compared to $109.2 million in the prior year period. Quarter was a benefit of $69.7 million, driven by a change in the tax status of certain foreign entities based on a certain check-the-box elections that we made, along with the impact, which I'm
going to try moving this,
for certain tax losses. This tax benefit compares to an income tax expense of $43.8 million in the prior year fourth quarter. On a reported basis, net income was $80.5 million or $1.19 per diluted share on 67.8 million shares, compared to net income of $21 million or earnings per diluted share of 32 cents in the prior year fourth quarter. Adjusted net income was $90.7 million or $1.34 per diluted share, compared to adjusted net income of $83.8 million or $1.27 per diluted share in the fiscal 19 fourth quarter. In the fourth quarter, we continue to focus on de-densifying and streamlining our global store fleet. We closed a net total of 232 stores in the quarter for a total of 693 closures in fiscal 2020. At year end, we operated 4,816 global stores. Now turning to our full year results. Total consolidated sales were $5.1 billion, a decline of 21.3% over the prior year. The sales decline was attributed to a comp store sales decline of 9.5%, approximately 700 permanent global store closures, disruption from the pandemic around the world, including temporary store closures, vendor supply shortages in the new Generation 9 hardware, and a lack of new product at the end of the Generation 8 cycle. E-commerce sales increased 191% for the fiscal year to represent nearly 30% of total net sales. Gross margin for the fiscal year decreased 480 basis points to 24.7% from 29.5% in 2019. SG&A expenses for the fiscal year were $1.5 billion, a decline of $408.5 million, or 21.2% versus reported SG&A in fiscal 2019. On an adjusted basis, SG&A declined $348.9 million, or 18.9% year over year. Importantly, these expenses include approximately $25 million in COVID-related safety protocol costs. As we said before, we continue to expect more than 2/3 of these reductions to be permanent, as they relate to permanent closures of stores and related labor costs associated with our de-densification strategy. We reported an operating loss of $230 compared to an operating loss of $399.6 million in the prior year. Adjusted operating loss was $238 million compared to operating income of $62.3 million in the prior year. Income tax for the year was a benefit of $55.3 million, driven by the changes in tax status of certain foreign entities and the impact of certain carryback provisions of the CARES Act previously mentioned. This tax benefit compares to an income tax expense of $37.6 million in the prior year. Our effective tax rate for the year was 18.9%. Importantly, we believe these tax elections will yield between $125 and $150 million in cash tax benefit to be received early next fiscal year. On a reported basis, our net loss was $215.3 million, or a loss of $3.31 per diluted share, compared to a net loss of $470.9 million, or a loss per diluted share of $5.38 in the prior year. Our adjusted net loss was $138.8 million, or a loss of $2.14 per diluted share, compared to adjusted net income of $19.1 million, or 22 cents per diluted share in fiscal 2019. Turning to the balance sheet, at the end of the fiscal year, we had cash and restricted cash of $635 million, $121.5 million higher than the end of last year, reflecting our continued efforts to optimize working capital and overall capitalization of our balance sheet. We ended the year with total inventory of $602.5 million, a 30% reduction from prior year inventory levels of $859.7 million. As a result of our ongoing inventory management efforts, our inventory efficiency continued to improve through the fourth quarter as we realized a trailing 12-month inventory turn of 5.9 times versus 4.4 times at the end of 2019. At the end of 2020, our balance sheet and liquidity position were significantly improved versus 2019, despite the impact of the pandemic. This was the result of actions we took to strengthen our financial health in 2020, including completion of an exchange offer and consent solicitation for $216.4 million of our unsecured notes, reducing the amount due to mature in 2021. Execution of 5 sale-leaseback transactions related to office buildings and the sale of a corporate travel asset, contributing approximately $95 million towards total liquidity. And the reduction of overall debt for the year by $57 million, including the early redemption of $125 million of our remaining March 2021 notes. Additionally, as of March 15, 2021, we fully redeemed the remaining $73.2 million of 2021 notes and repaid the outstanding balance of $25 million on our ABL. Capital expenditures for the year were $60 million, at the low end of our previously provided guidance of $60 to $65 million. In fiscal 2020, cash flow from operating activities was an inflow of $123.7 million, an increase of $538.2 million compared to an outflow of $414.5 million during the same period last year. The increase was primarily due to improvements in working capital as a result of optimizing inventory and accounts payable levels through maximizing the cash conversion cycle and more efficient carrying levels of inventory. In terms of our outlook, we're optimistic about our transformation in the emerging console cycle. We recognize business risks remain elevated due to the pandemic and post-pandemic uncertainty. We are not providing specific annual sales and earnings guidance. In summary, 2020 was an unprecedented year, but we're very proud of all that we accomplished to advance our strategic priorities and enhance our financial health. We finished 2020 a stronger company and are well positioned to capitalize on the opportunities ahead of us in 2021 as we move to the next phase of our transformation. GameStop is the only retailer of scale exclusively focused on the gaming industry and adjacent categories. We have a unique opportunity to become the ultimate destination for gamers. I want to take a moment to address several changes to our leadership team. As you know, we announced in February that Jim Bell was stepping down from the CFO role with the company later this week. I want to contributions to our company during the stabilization and optimization phases of our transformation, particularly his leadership in managing several $100 million in expense reductions and over $350 million in working capital generation. We also announced this week that Frank Hamlin, our Chief Customer Officer, is leaving the company, and I'm very appreciative of his leadership and efforts over the last couple of years of our transformation. Specifically, his spearheading the concept development and execution of our Tulsa project of interactive gaming stores. Finally, we are very excited to welcome Jenna Owens as our new Chief Operating Officer. We believe Jenna's extensive career in technology-led organizations, such as Amazon and Google, are another important addition to our leadership team and our future transformation initiatives. Thank you again for your support and interest in GameStop.
Boring.
We remain very excited about the momentum we have, the many positive changes we are making, and the talent we are attracting to GameStop, all of which we believe will deliver long-term value creation for our stakeholders.
Boring call.
This
boring
concludes
day.
today's conference. You may disconnect your lines at this time. Thank you for
That's
your
it?
participation. Have a wonderful evening.
No, that can't be. Customer service. Hello? I can't believe it. That was lame. That was boring and lame. Fine. Fine. The only thing this has to trade off right here is the fact that, yay, maybe a transition in another, leadership role. Yeah, you know what? Course members freaking nailed it, okay? You want to see the quality conversation you could be a part of if you join my freaking Discord already with that 38% off coupon code. Where else can you get this kind of... Okay. All right. I'm sorry. Yeah. God. Okay. Well, yeah, I guess that's all I got to say. So, in that case, make sure to check out the courses down below. Get that 38% off coupon code that expires on Friday. The price goes up. I have a little happy ending music here because the conference call was boring. So let's just put music on. Oh, look at the red candlestick while the music is playing. This is not good. No, it's not good at all. I'll just see you.